Good morning, everyone. It is Tuesday, December 13th here in New York City. This is Yahoo Finance Live. I'm Brad Smith alongside Julie Hyman and Brian Sazi. It is a very busy day on Wall Street, so let's get right to the top 3 things that you need to know as the clock hits 9 a.m. Futures are in massive rally mode after CPI rose less than expected in November. The consumer price index rising just 0.1% from last month. Economists were expecting 0.3% in a rise. It's the slowest increase in more than a year.
And headlines rocking the crypto world. FTX founder Sam Bankman-Fried has been arrested in the Bahamas. Also, Binance temporarily pausing withdrawals of stablecoin USDC with investor fears mounting over the FTX collapse and its tendrils.
And we've got a slew of executives on deck this morning. We'll bring you interviews with United Airlines CEO Scott Kirby and Moderna CEO Stefan Bancel. This is a show you do not want to miss. You could, but you really do not want to. Julie, back over to you at the Wi-Fi Interactive. Really a crazy morning for all things stocks.
Yeah, a huge upswings that we're seeing in the equity markets here this morning because of that more benign than estimated CPI reading. Consumer inflation, as we mentioned, rising 0.1% month over month. That is the smallest increase in more than a year. Even if you back out food and energy, you still get an increase of only 0.2%. That works out to 7.1% on the headline year over year and 6.0% on the core. We're going to dig more into this later, but first got to talk about the market reaction. We are seeing a big bump up in the futures, and the bump, by the way, actually started a little bit before the data came out. So there were some questions around the release of it a little bit earlier today. Looking at Dow futures, we've got a boost of nearly 750 points, and Nasdaq 100 futures, which have been the most sensitive to changes in perceptions of where interest rates are going, seeing the biggest increase up by nearly 3.8%. And we also, of course, have to talk about what's happening in terms of interest rate perceptions with what's going on in the Treasury market. So here we see prices going higher. That means yields are going lower. So effectively, the market is extrapolating this number to mean that perhaps if inflation is coming down faster than expected, the Fed's not going to need to be as aggressive with interest rate increases. Of course, the Fed is bringing us interest rate increases tomorrow, broadly expected still to raise rates by 50 basis points, Sauce.
All right, for those wondering, me and Julie did not plan on matching here today at all. Disgraced founder of crypto trading platform FTX, Sam Bankman-Fried, has been arrested in the Bahamas after the U.S. filed criminal charges. Prosecutors confirmed he has been charged and said an indictment will be unsealed today. For the latest, let's bring in Yahoo Finance legal correspondent Alexis Keenan. Alexis, a lot to unpack here.
A lot to unpack. Okay, here's what we have going on. It's a big landscape of lawsuits from 3 different U.S. agencies. One is, of course, the Department of Justice that has confirmed that it has filed charges, though those were filed in a sealed indictment, so we haven't yet seen that. However, the New York Times reports that the charges are based on wire fraud conspiracy. By the way, that means there's somebody else involved, so we could see some other charges coming down against another individual. Securities fraud conspiracy, and also money laundering. That's what the New York Times says. Also, though, the SEC filing a complaint. This is a civil complaint, so very different from what the DOJ would be doing, and also different reason why Sam Bankman-Fried would be arrested and brought back, extradited to the United States. That would be based on the Department of Justice's criminal charges. Though we're seeing all the color come from this SEC complaint because that has already been made public. And what this complaint says is that going all the way back to the beginning of FTX, back to May 2019, that Sam Bankman-Fried had raised $1.8 billion from equity investors. And the hook here, the jurisdictional hook for the SEC, they say 1.1 billion of those funds were raised from 90 US-based investors. They say that Bankman-Fried gave concealed from investors that he diverted customers' funds to Alameda, which we've talked a lot about, the suspicions about that. Also commingled customer funds in Alameda to make venture investments. It goes on to say that also these funds were used to make loans to himself, also to make loans to executives at the company, as well as to give an unlimited line of credit to Alameda via FTX. Also, lavish real estate purchases, also political donations named here, and also finally overexposing FTX to illiquid assets, all while the SEC says Sam Bankman-Fried was holding out to its investors that they had tight risk management controls in place.
So pair this with some of the proceedings that we've also seen already legally. I mean, we just had one kind of conclude with Elizabeth Holmes with regard to defrauding investors. Are there any similarities that we see here in comparison to that, which many people had to wrap their minds around, many watching documentaries even over the span of the last year and a half?
Yeah, so it's a good comparison, and I think what's important to point out is that the Department of Justice's charges are like those, if the New York Times' reporting is accurate here, are like those that came against Elizabeth Holmes and other Ponzi scheme, like a Bernie Madoff, let's say.
Sure.
So fraud is based here from the DOJ. They bring charges when there is a false or misleading statement or omission that induces investors to give up something of value, and they do it knowingly and with intention to defraud those investors. So the DOJ needs much less than the SEC does, right? Because we have the SEC problem where there's been so much fighting about whether these crypto assets are or are not securities, and the SEC's jurisdiction is about securities. That's what they are able to litigate over. And by the way, with those charges being civil charges, they are much less threatening than those coming from the DOJ. So in terms of it being like the case that we just saw play out against Elizabeth Holmes, the takeaway, I would say, is how serious these charges are. Those charges against her and her co-conspirator landed them between 11 years and almost 13 years behind bars. So these are very, very serious charges.
Just very quickly, Alexis, do the DOJ and the SEC typically share information?
They do. Now, they're different entities. There are plenty of probably egos within both of those agencies that would like to take credit for what they are finding, but absolutely they do share information. And that has been the case in many fraud cases in the past where the SEC comes in. They can assess fines if the defendant is found guilty of the charges. But then the DOJ, of course, has that much broader jurisdiction to put people behind bars. So also, I should mention that the CFTC has also waged some claims against Sam Bankman-Fried. So all of this, what it means is we won't be hearing from him today in the testimony that starts at 10 a.m., where John Ray, the new CEO of FTX, is expected to testify. He gave some prepared statements yesterday, which laid out some of these. In some ways, it mirrors his very broad statements, mirror some of what is being reported about these complaints that are coming down in the indictment that we're expecting.
All right, this is indeed just the beginning of what is really setting up to be a whirlwind of news that's still going to continue to come around
A lot
the
more to come
FTX
today.
downfall. Thanks so much. We appreciate it, Alexis Keenan, Yahoo Finance's own. Let's dive more into the stunning fall of SBF with Ari Redbord, who is the TRM Labs of legal, head of legal and government affairs. He's also the former senior advisor to the deputy secretary at the U.S. Department of the Treasury. Given the many agencies that are going to be involved, and even across different jurisdictions here, where do you expect that one agency may take the lead over another, and who will hold the priority of really looking into the information that needs to come in this downfall of FTX?
Yeah, no, first, thanks so much for having me. And that was an excellent synopsis of all this going on by Alexis in a very complicated environment. And I think that just to start, the short answer to your question is it's usually the Department of Justice. I spent about 11 years as a federal prosecutor, and I can tell you that oftentimes sort of civil cases out of the SEC or other regulators or even sort of by plaintiffs are sort of put on the back burner pending criminal charges because a defendant really can't speak or be deposed or be involved in civil litigation if there is a pending criminal charge. Because as Alexis mentioned, obviously, when you're talking about criminal charges, you're talking about potential jail time. And in this case, you're talking about some really potential significant jail time, given what likely the guidelines, the federal sentencing guidelines will be in this case. So it will absolutely be DOJ. And I think we're going to learn a lot more really, probably over the course of today as to what the exact criminal charge is and then ultimately what the exposure is. But sort of given my experience, wire fraud, securities fraud, money laundering make a lot of sense here. And we'll be looking at some pretty significant federal sentencing guidelines.
Ari, it's Julie here. What I've been trying to wrap my head around while this is going on, because obviously there are going to be congressional hearings today and tomorrow from House and Senate committees. There's been a lot of talk about regulation, but fraud is fraud, right? So I've just been trying to figure out if different regulation had been in place, would this have prevented this alleged fraud? Or, there were laws in place, and Bernie Madoff did what he did, and Elizabeth Holmes did what she did. So I'm just trying to sort of separate the two.
Yeah, no, I think you're absolutely right with the sort of tone of the question, and that is there are laws today in the United States that sort of protect consumers and investors against this type of activity. You're always going to have fraud and financial crime out there, as you just mentioned. But this case really is more akin to an Enron or a Lehman, or a case that just involved sort of mismanagement of a centralized business, right? Business happened to be engaged in the custodying and trading of cryptocurrency. However, that was really the only crypto angle to it. This was not a decentralized protocol. This was not a true sort of blockchain-based business. And what you see here is just the mismanagement that you've always seen. One really important flag here is that FTX was not a U.S. business. It was a entity that was based in the Bahamas. So a lot of sort of these U.S. laws that would have applied, potentially didn't apply. And that's why we have in place today in the U.S. consumer protection laws. We have investor protection laws. Every state has a money transmitter law that really covers a lot of what we saw here today. And then honestly, what we're seeing right now from DOJ and SEC, we're seeing fraud and securities type of laws. So yes, laws are already in place today. Don't get me wrong. The cryptocurrency space needs more regulatory clarity, and we're going to absolutely see that sort of in the U.S. In my mind, in 2023, as we kind of move forward, whether it's on stablecoin regulation or other sort of pieces of sort of a broader framework for cryptocurrencies, businesses need more clarity. But this case is really not one of those cases that clarity would have necessarily applied to.
Ari, you mentioned a moment ago the potential for significant federal sentencing guidelines. What might they look like here for SBF, and how would you compare it to what happened to Bernie Madoff?
Yeah, I've not admittedly done sort of the calculation, and it's pretty complicated. But one thing that drives the federal sentencing guidelines, and they are not mandatory anymore, but most judges follow them. And the amount of fraud involved in a case, just the pure number, is something that really drives the guideline range. And here we're talking about potentially unprecedented numbers. So we're going to see, a very high guideline range. Now, that said, that range can go down by certain mitigating factors. For example, will there be cooperation in the case? And you ask, well, what could he cooperate on, right? He was the highest level executive. Well, I think one of the things that prosecutors are really going to be focused on here, and something that I always focused on as a prosecutor, was restitution for the victims. We want to ensure that there's a victim-centered approach here, and that we go after these funds. And if there's any way for the defendant here to help prosecutors and investigators find or discover or recover funds for victims, that may be a mitigating factor. So lots and lots to happen here, and try to figure out before we ever get anywhere near a sentence. But we're looking at very significant time.
Yes, we'll be following that to see, and we'll be looking forward to that DOJ complaint actually being unsealed so we can get more details on that. Ari Redworth, thank you so much for your perspective on this. TRM Labs Head of Legal and Government Affairs. Appreciate it.
Thank you.
Thanks. As all of this is happening, Binance has temporarily paused some fund withdrawals. It's going to be doing a swap. Let's check in with Jared Blickery about all of this. This has to do not with Bitcoin, Jared, but with U.S. dollar coin.
Yes, USDC, they have temporarily paused withdrawals. They say that if it's temporary, they should be able to resume. And so they are saying they have to do behind the scenes a token swap for some of those assets. We'll leave the details up to them. But I just want to show you what's going on in cryptocurrency world. Actually, a lot of green here, and we're going to get to why that is in a second. But I do want to pull up BNB. That is the token for Binance. That is its namesake token here. And you can see largely underwater over the past 24 hours, although it is well off of those lows. So with everything going on with cracks maybe showing in the largest exchange in the world, Sam Bankman-Fried under arrest. We have charges from the SEC now, charges from the CFTC coming. All of this, what mattered today in terms of what's moving cryptocurrency, is CPI. That's all it took, was an undershoot on this report. And because that report is so levered to the Fed and its monetary policy decisions, that is what is goosing this risk asset right now. So that is a significant move. Up 5%, that is a lot more than anything we've seen in equities. And just take a look on a 1 month basis, it has definitely broken through to the upside this range. So I think at the end of the day, it really only comes down to the Fed. And wouldn't that be par for the course for this year, Scott? Yours, guys.
Yahoo Finance's own Jared Blickery. A lot to continue to cover within the crypto space. Thanks so much for taking a look at some of the tick by tick here that we're tracking. Coming up, everyone, why our next guest says it's the perfect storm that's driving inflation. We're going to discuss exactly what that is next as you're taking a look at U.S. futures handedly on the back of that CPI data coming out this morning. Stay tuned. Futures are in rally mode after the CPI data came in cooler than expected for the month of November. Taking a look at the Dow, the S&P 500, and the Nasdaq, you're all seeing them up higher across the board. The Dow up more than 2% right now, 2.4%. S&P 500 futures up by a little more than 3%, and then the Nasdaq futures, tech-heavy average, up a little more than 4%. We're continuing to keep a close eye on this, and Yahoo Finance's Jennifer Schonberger joins us now to break down some of those numbers even deeper. Jen.
Good morning, Brad. That's right. November's consumer price index clocking in cooler than expected. Welcome news for investors and the Federal Reserve, which will use this data as they kick off their two-day policy meeting today. Jumping into those numbers, November CPI coming in at just up at 0.1% versus 0.3% expected month over month. Year over year, up 7.1% versus 7.3% expected. Now, stripping out the volatile food and energy prices for that so-called core reading, the Fed's preferred measure, CPI was up 0.2% month over month versus 0.3% expected. Year over year, 6% versus 6.1% expected. Now, the index for shelter, which is made up of rent and owner's equivalent rent, was by far the largest contributor, up 7%. Now, keep in mind that shelter comprises 30% of the overall CPI and 40% of the core reading. So shelter more than offsetting decreases in energy indexes, the energy index falling 1.6% month over month as prices for gas, natural gas, and electricity all dropping. Now, we're still paying up for groceries. Grocery prices rose 10.6% year over year, but on a monthly basis, growing 0.5% versus 0.6% in October. 4 of the 6 major grocery categories increased month over month. We're paying more for fruits and veggies, cereals, and baked goods. But on the flip side, poultry, fish, eggs, and meat all falling, beef prices falling 0.8%. Now, I want to zoom out here for a second and look at the difference in core month-over-month percentage change since August, because that really shows you the declining trend in inflation really appearing to grow at a slower clip. In August and September, we were growing it's up 0.6%. November now, 0.2%. So again, the Fed going to take this into account as they kick off their policy meeting today. This certainly dovetails with what Fed Chair Powell has channeled, which is to step down to a 50 basis point rate hike tomorrow, down from that torrid pace of 75 basis points over the past 4 meetings. So we'll see what the Fed has to do tomorrow on this. Back to you.
Yeah, the Fed bringing down those protein prices. I could dig it, Jen. Thanks so much. Appreciate it. All right, let's continue the convo on those new CPI numbers and on inflation. Joining us now is Amanda Agati, Chief Investment Officer at PNC Asset Management Group. Amanda, always nice to see you. We're seeing a real rip-your-face-off rally here in the pre-market. My question to you, is it justified?
I think we're moving a little bit too far and too fast. I'd say hashtag not out of the woods yet. The market is definitely ready to claim victory in this inflationary battle. We're starting to see a couple of data points here consecutively build that we're making some progress. But I think at the end of the day, it's all going to come down to what the Fed says about the dot plot and the revisions for that following its meeting this week. I think that could be really the key to the path forward.
Amanda, for the layperson out there, they're waking up this morning and they still see inflation on the CPI up sizably year over year. I believe it was 7.1%. Is this rally we're seeing here, at least in the pre-market, just a reflection of the Fed maybe not going to raise rates as much as people thought in the first half of next year?
Well, I'm not sure that this gives the Fed any kind of an out per se. We still think the Fed's going to do 50 basis points tomorrow, and we still think that there's room for additional rate hikes in the first half of next year. With a 7 handle on headline and a 6 handle on core, it's hard to claim a lot of victory, right? This is not a satisfying place to be from an inflationary perspective. So the Fed's job is definitely not done here, but the market is using this as a signal for a Fed pause potentially sooner than maybe what we might otherwise expect.
Amanda, in your notes to us, you note that there's never been a scenario in which the Fed has raised its terminal rate to 4.6% and avoided a recession. Do you expect for us to, especially at a time where the dot plot is already showing 4.6% in the latest terminal rate, do you expect them to come out and issue anything tomorrow that signals it could go beyond that?
Oh, absolutely. I think Fed officials have definitely hinted that the dot plot is going higher from here. And so I think it's really a key question of how much higher. Market thinks they'll go to about 5. I still think that, basically is a foregone conclusion that it tips us into recession starting in the second quarter of next year. But I keep coming back to this idea that there's a perfect storm of macro headwinds that have really been in the driver's seat swirling all year long. And so it's not necessarily a foregone conclusion that the Fed has to go all the way there to the end state for the dot plot. If they get a reprieve from some of these perfect storm headwinds, perhaps we can stop short of that. And, perhaps today is also the first sign of some of the gale force winds of that perfect storm subsiding.
Hey, Amanda, it's Julie here. So if the storm is subsiding, we're starting to get the market pricing in an interest rate cut, maybe at the end of next year. Do you think that is actually likely to happen, or is the Fed more likely to just stop?
No, I think the market is assuming hastily that we're going to see Fed cuts in the second half of next year. I think there's about 50 basis points worth of cuts priced into the futures market. And so I would say that's way premature. We're describing Fed policy from here as longer for longer. And so to see an immediate pivot somewhere in the middle of the second half of next year seems just not in alignment with where the data and the trends are holding up today. I think a pause, though, signaling a pause or even just taking a pause is almost as powerful as a cut in the market's eye. So to the extent that we could signal where that end state for policy is, I think that can be an important driver of positive returns in the new year.
Well, enjoy today's rally. We'll leave it there. Amanda Agati, PNC Asset Management Group Chief Investment Officer. Thanks so much. Appreciate it. Coming up, we'll have the opening bell on Wall Street and look at a few hot tickers on the Yahoo Finance platform, including the always riveting Oracle. We'll be right back. Hi there. Welcome back to Yahoo Finance. We're seeing a real strong rally here in the pre-market as we come up against that opening bell on Wall Street. You're seeing all three major indices nicely in the green. Dow leading the way up over 800 points as the market really continues to assess and digest that CPI index, which came in much lighter than expected. But let's hit a few tickers here to get this day kicking off here. Shares of Boeing and United Airlines in focus this morning following news that United placed an order for 100 of Boeing's 787 Dreamliners with options to purchase 100 more. And guys, early this morning, we'll have more from this interview, but I talked to United CEO Scott Kirby, telling me this is a very big deal and also a bet on the future of travel, and that future of travel continuing to recover from the debts of the COVID-19 pandemic.
You know, this is a massive deal, and not just in the size of the order that's been placed, but also what this means for how United, how many of the other airlines are really reframing or kind of looking across their fleet that they have right now and issuing some of those updates to it through the purchases that they're making. And we've seen that over the course of this year, but this one really to cap off a year for Boeing, where they've been trying to make sure that even as they're starting to have some of the production come back online, and particularly for their largest airplanes, they're now also seeing some of these orders that are really going to help them get some of that cash flow to come in to really help sustain with the production of the existing orders that they have and then take them out a couple years. At least for United right now, they're expecting to take delivery of about 700 new narrow and wide body aircraft by the end of 2032.
So you guys have been talking about it through the prism of United, but obviously from the Boeing's perspective, this is a big deal as well because the company has been trying to claw its way back really reputationally. Right. And so this is significant. The move in those Boeing shares is pretty significant this morning as well. They didn't disclose the monetary value of this, but I did see an estimate from Bloomberg that it could be worth up to $17 billion. So
I was going to go with expensive.
It's a
big deal. It's a big deal.
Significant.
You know, but Kirby also mentioned too. I asked him if he has confidence in getting these planes on time that you're ordering, and I think he did acknowledge that supply chain problems continue, notably with jet engines. So something to keep an eye on.
Well, here's the other thing too. It's the type of traveler that they're trying to woo right now, especially if you have a leisure traveler that was, at least for the last year and a half, willing to spend up for a better experience on the flight. You've had some of the moves from airlines to take out that business class and just create, or first class and just create more business class experiences. And so United, they're noting within this that they've continued to upgrade the interiors of their existing fleet. 90% of the carrier's international wide bodies now featuring a business class seat, and then additionally that premium plus seating too.
That premium seating, I think, is now going to come with 13-inch TVs on the back of the seat. That's awesome.
That's great. Yeah.
That will get me out of my house to take that business meeting. I want to go on the 13-inch TV on the plane in United. I'm in.
All right, we got the opening bell here on Wall Street. Our friend Mark Smucker from J.M. Smucker ringing the opening bell. It is the 125th anniversary of
wearing that jelly purple. My man Mark Smucker getting it done. I like it. I like it.
Grape that's going on there.
Grape jelly suit.
We've obviously had stocks rallying, futures rallying this morning following that more benign than estimated CPI print. I keep scrolling through all the components and seeing what stands out to me. Margarine prices were down 2.3% month over month last month.
I used to use margarine on jelly. That was good.
Margarine soup prices down 2%. Speaking of packaged goods, I didn't see if they break out jelly in here, but they do break out peanut butter, by the way. Peanut butter prices down 1.6%.
Margarine's not good for you, right?
Yeah, I don't know.
Just like everything else in the world.
Yes,
right?
Nothing is good for you anymore.
But
you know what's good for me?
The Wi-Fi Interactive.
Brad Smith at the Wi-Fi Interactive.
Uncrustables are good for everybody. That's why we had James Smucker there on the screen for so long at the New York Stock Exchange this morning. Also taking a look at the Dow Jones Industrial Average. That's looking pretty good right now. Out of the gate, up 2%. And that, of course, as we had seen the huge reaction to this CPI print that came in a little bit lighter than expected here in terms of the year or month over month increase. Let me just populate this chart for you so you got at least something to look at. And that's that move that we saw on CPI prior to the start of today's trading activity, or at least with everything priced in today and coming into the start of the opening cross here. The Nasdaq Composite, you're seeing that up by about 3.6%, 404 points to the upside there for the tech-heavy average. S&P 500, that too, also seeing a rare triple-digit gain day here for the S&P 500. You're seeing that up by about 2.6%. And then also, let's see how some of that sector activity is faring here. Out of the gate, we've got some leaders and some laggards, but actually no laggards, excuse me there. We've got Man, XLC, okay, that's ripping. And technology is also ripping here today. Communication services and technology also just leading the pack here by about 3.6% for technology. And then even in, the consumer staples sector, you're seeing some gains there to the tunes of about 0.9%. So all 11 out of 11 S&P 500 sectors are in positive territory to start the day. Julie?
Thanks so much, Brad. Sorry, I'm still going through the components of CPI, which I always find entertaining.
Now,
you go, Julie. You
an
go.
hour later.
You go.
Let's look at shares of Oracle. They're up more than 4.5% following an earnings beat that saw the cloud software company exceed expectations on the top and bottom lines. Total revenue up 18% year over year. And the company doing well in particular from Cerner. Remember, that's the digital health records company that it purchased, and that helped out for the company. And that's something that the company is talking about, that it's going to continue to perform. It generated $1.5 billion in the quarter.
I love this earnings call by Larry Ellison and Safra Katz. I keyworded economy. It didn't come up. This is a team that held about an hour conference call, didn't even mention the economy, what's happening out there in the world. So it was just interesting to hear that type of conference call. Our friend Brent Thill over at Jefferies saying, Oracle remains an outlier with a bullish outlook in the face of a tough IT environment. You wouldn't know it by the conference call, but nonetheless, this was a good quarter for Oracle.
I mean, if you look at those double-digit gains in the various, business lines, maybe you can see why.
Right. One of the only times you'll see economies in this earnings call is the economies of scale that they're talking about within the cloud. And so particularly as they think to Cerner, and Cerner was such a massive play, and here's why. On the cybersecurity front, you have an industry that in healthcare was one of the most vulnerable. You attach that to a major and mega cap company in Oracle that has some of the more privatized or at least prioritization around privacy, cloud solutions, combine that all together. That's a significant play for them to be able to play within healthcare and perhaps provide a little bit more certainty around that cybersecurity front. But again, the growth segment across segment right now is really astounding for investors.
And it's also interesting what Oracle is spending its money on, right? I think it was in the Bank of America Fund Manager Survey today, perhaps, what investors want companies to spend money on right now. And the answer is they don't really want them to spend money, is the overarching. But Oracle spent $2.4 billion on capital expenditures in the quarter, mostly on data centers to meet demand for the cloud. So I don't know if they talked about employees if they talked about headcount on the call.
No economy, no employees, nothing. But look, I think this has been the year where Oracle really has shown its stripes in the cloud, that it deserves to be mentioned in the same breath as an Amazon Web Services. Yeah,
I mean, it's a huge time for Oracle, and we'll see if they have any other acquisition targets at better valuations that they might go after. But as of right now, to your point, Julie, it doesn't look like they're spending aggressively like some other companies. Checking in now, also, we got to take a look at shares of Moderna, mRNA. Those are moving on the news that the company's cancer vaccine, along with a Merck cancer drug, has shown success in a mid-stage clinical trial. For more on this, we bring in Yahoo Finance's Anjali Kamlani following the story and joins us now for more. Anjali.
That's right. So really good news for this cancer vaccine, the personalized cancer vaccine for melanoma, especially late stage and high risk individuals. The way that Moderna and Merck fashioned this clinical trial is that post-surgery individuals will get doses of both Merck's blockbuster drug Keytruda as well as doses of Moderna's personalized vaccine. And the deal has been a $250 million infusion from Merck to co-develop and share in profits for this. Moderna is working on the trial design with Merck, which obviously has a vast, experience with cancer and all types of cancer. So this really opens the door for more potential products down the line. Now, the results from this phase 2, it's preliminary, it's just from the company, 44% reduction in the risk of recurring disease or death. That's really important. And this is a trial, this is the phase 2 of that trial. So they're going to be starting that phase 3 pretty shortly. So a lot going on, a lot of exciting news. This is a first testament and proof case for cancer vaccines.
And you're going to be talking to Stéphane Bancel, the Moderna CEO, in the 10 a.m. hour about this discovery. What are we hearing from Moderna sort of initially here about the significance of this?
It is not an exaggeration to say that they are beyond fired up. I had a quick chat with Stefan Bensel earlier, and really he pointed to, the tale of what happened with the COVID product, right? Till now, they've been trying to fight the perception that they're just a one product company, and this really opens the door for that. He told me, quote, "We have $17 billion of cash on hand. We're not going to be shy in deploying that. We're going to be very aggressive with the capital we have because we believe we can save a lot of people's lives." So right there, you can hear, the optimism and the confidence in moving forward on this product.
Yeah, and that seems to be reflected in what the shares are doing as well today, up right now by about 16%. Thanks, Anjali. Looking forward to hearing from Stefan a little bit later on. Thanks. Well, coming up next, what's on tap for the much-anticipated U.S. House hearing on the collapse of FTX, even though the star witness will no longer be there. We'll discuss all of that next.
I really do suggest to these intermediaries, these storefronts, these casinos, if you wish, to come into compliance, work with the SEC to get into compliance.
If he did break the law or anybody else in there broke the law, they'll face the full force of the law because there's a lot of people that are not happy about this, and I'm one of them.
This crash accelerates regulatory intervention. I mean, in fact, in a sense, right, SBF is like the Jordan Belfort of the crypto era. Instead of the Wolf of Wall Street, they'll make a movie called The King of Crypto.
Those were some tidbits from some of our guests over the past few weeks who were weighing in on the FTX collapse and the stunning fall of Sam Bankman-Fried, who, of course, was, as we've been discussing, arrested in the Bahamas. He awaits extradition to the U.S. He's also been charged in a civil complaint from the Securities and Exchange Commission and the CFTC. All of this coming as lawmakers head to Capitol Hill today to grill John J. Ray, the new administrative CEO of FTX. And let's bring in Courtney Rosenberger, Managing Director of Policy Research at Strategas, a Baird company. Courtney, thank you for being here. I want to pick up, first of all, on what Michael Saylor, the MicroStrategy CEO, was saying in that last little bit, which he is saying that this will all accelerate regulation of the industry. But will it?
It's certainly going to accelerate attention on the industry. You're seeing members that had previously not really made any comments about crypto regulation, like on the Senate Banking, Sherrod Brown, start to make comments, start to reach out to regulators. So I do think that we'll see enhanced efforts. We also have Pat McHenry, the incoming chair of House Financial Services Committee. He has really said that he wants to do stablecoin legislation for the past 2 years. And now he's been making statements that he still wants to do stablecoin legislation, but he's now looking at potentially having to do additional legislation.
Courtney,
it's just whether or not they can get an agreement.
Okay, got it. Sorry, you were breaking up there for a hot second. You know, even as you were kind of looking through what's already taken place and what comes forward from here, there is this question that I have, particularly of what is already in place from a legal perspective, where these companies have leaned into, and the exchanges on the crypto front have leaned into their terms and conditions, in some cases, to pause withdrawals in the event that they don't have enough cash on hand for their customers, which is one of the instances that we saw within FTX, one of many, but now that we're also seeing with Binance today.
Yeah, I mean, I think that that's really going to be the question that lawmakers are going to try to push with FTX today. I think that there's also going to be a lot of attention, particularly from Republicans, going after regulators, whether or not there's more that should have been done to prevent what had happened that was still within regulators' purview. But you're also going to see lawmakers from both sides of the aisle talking about how they have legislation in the works or have proposals that could prevent this going forward.
Courtney, what type of regulation would be good for this industry at this point?
I mean, first and foremost, they just need clear legislation and regulation in terms of who has regulatory purview, what makes a commodity, what makes a security. Senator Loomis and Senator Gillibrand, they had introduced legislation, the Responsible Financial Innovation Act, this past year. Senator Loomis has said that she's going to reintroduce it, that aims to clearly define what is a commodity, what is a security. And in her definition, Bitcoin is the only cryptocurrency that would qualify as a commodity. Everything else would be a security.
Courtney, as always, members of Congress, they write a lot of bills. They introduce a lot of bills. Not that many of the bills get passed. So, like, of this pretty broad swath of different bills and legislation that is aimed at this, what is realistically actually going to get through and on what timeline?
I mean, that's a great question. And certainly Congress, particularly a Congress with a Republican House and a Democratic Senate, there's going to be a lot of gridlock. But this is one area where we think that there could be a successful effort, especially now that there's joint concern about consumer protections. You've now had these cryptocurrencies blow up, FTX being the latest one. So there's a lot of concern about the consumer side of the equation, and that could be the catalyst to finally get some action here.
Additionally, while we have you, we got to talk about what a potential government shutdown would mean right now, especially at a time where there's still so much uncertain regarding the economy, how the Fed will move forward. We know Congress is tracking all of this, but there's still this need to pass a short-term resolution just to get additional time for Congress and for the government not to shut down.
Yeah, we're not anticipating a government shutdown. We do think that they're going to do a 1-week short-term continuing resolution to buy themselves until December 23rd. And at that point, they're going to have to make a decision. Can they get an omnibus package done to set spending levels for fiscal year 2023? Certainly, we've had members of both sides say that there's been progress there, but there's still a really tight timeline to get an omnibus package done by December 23rd. So then it becomes a question of, do they do a 1-year continuing resolution, which Democrats would probably favor, or do they do a short-term, potentially 1-month continuing resolution into January? That's what some Republicans have said that they want to do, but in reality, we don't think that anyone wants to go into budget trench warfare next Congress with Republicans in the House and Democrats in the Senate. It'd be extremely difficult to get anything done. So we are hopeful that they will be able to get an omnibus package done, but certainly the timing is tight, but we don't think that there's going to be a shutdown.
Courtney Rosenberger, Managing Director of Policy Research at Strategas, a Baird company. Good to see you. We'll talk to you soon.
Thank you.
All right, a good chart here from the team over at Bespoke. If you're under 40 or over 60, it's less likely than ever that you'll be moving next year as economic uncertainty weighs on the spending intention on many households, as you'd see in that chart from the team over at Bespoke. All All right, straight ahead, the great unwinding of Twitter under Elon Musk continues. More analysis on this one next.
The drama continues over at Twitter. The company reportedly disbanding its Trust and Safety Council just moments before it was scheduled to meet with company representatives. Yahoo Finance's Dan Howley here with the latest. And this was the voluntary board that helped with content moderation, right?
That's right, Julie. This is made up of members of civil society groups. And really, it's an external group that they're almost third party, but related to Twitter that looked at content provided counsel as to, hate speech, child exploitation, things along those lines. And it was disbanded just as it was about to meet. They got an email saying that basically, they were done with them, more or less. And now Twitter is saying that, this is all part of a strategy to kind of go back and kind of redraw the lines around content moderation. They say that they want to move a lot faster, but they, and they will make mistakes, but that they're trying to get things right. But, doing both can be difficult, obviously, as we've seen in the past. There's the reinstatement of Kanye West and then his subsequent dismissal or suspension after he had posted some terrible content. So, obviously, this is going to continue to be an issue that the company grapples with.
Dan, Twitter also officially relaunched the controversial subscription service that they had featuring blue check marks for all who paid. So what's coming forth now as they relaunch this?
Yeah, so obviously you remember the blue check mark fiasco when they originally tried to launch it as a part of Twitter Blue, where everybody got a blue check mark if they paid $8 a month. Naturally, that went sideways pretty quickly. We had people impersonating accounts from everyone from LeBron James to Lockheed Martin to Eli Lilly to former President Trump. This time around, they're continuing to offer that. They said there'll be fewer ads, half the ads if you sign up, and then there'll be a higher level subscription later in the year that would have no ads. It's still the $8 a month. You still get the blue check mark. You still get the ability to edit tweets, but the difference here is in order to get that blue check mark, you have to wait 90 days after starting your account. And then you also have to have a phone number registered to it. So the idea there is that, you'd think, be able to cut down on some of that impersonation that we had seen. And it had real consequences. Eli Lilly's stock had dropped around the time that people had impersonated the company saying that they were going to give away insulin for free. So it's a real issue that obviously Twitter has to deal with. Chances are there will still be people that try to impersonate others, though.
Yeah, it was market moving for sure with regard to that subscription plan or program that they had rolled out on the onset. But even as we think about all the changes that have come at Twitter over the past month and change now, what is the internal tenor like? What are you hearing from those who are still at the company or the reports that are still surfacing just around what that environment is like inside the walls of Twitter?
Yeah, it seems, that it's still very much unsettled, to say the least, right? We're still getting a lot of reports from different outlets that, are speaking to people inside who are, dissatisfied. You wouldn't be getting that if it was a company where everybody was, happy with how it was going. Everybody had to come back from, being able to work remotely from anywhere. They're being told to show up at offices, seemingly at a moment's notice, to talk to Elon Musk about code changes, about what they do. They have beds now in some of the offices, which is just bizarre because he's making people sleep there more or less. It seems as though this company went from a place where people enjoyed working to a place where they're working at all hours and kind of under duress at points. Maybe not duress, but heavy pressure, let's say, since Elon Musk is really determined to turn this around in his kind of liking.
Dan, thanks so much. Dan Howley talking about what's been going on at Twitter. Thanks for your continuing coverage on this. Appreciate it, Dan. And speaking of continuing coverage, we now have the unsealed indictment against Sam Bankman-Fried following his arrest in the Bahamas. This coming to us from the United States District Court, Southern District of New York. Our Alexis Keenan is going through it, but I can tell you there are 8 charges in this unsealed indictment. Among them, conspiracy to commit wire fraud on customers as well as the actual wire fraud, conspiracy to commit wire fraud on lenders as well. And as Brad pointed out earlier, an intriguing charge as well, conspiracy to defraud the United States and violate campaign finance laws. Again, Alexis is going through it, as are we, and we will have more details for you next. Federal prosecutors in the Southern District of New York have unsealed the indictment for FTX founder Sam Bankman-Fried. Yahoo Finance's Alexis Keenan joined us now. She's been going through it. Obviously, you know, it takes a little time to digest what we have in there, but we know that there are now 8 counts within this indictment.
Yes, and here they are. This is a very broad brush complaint, by the way, or indictment, I should say, coming from a grand jury. This is coming from the Southern District of New York, so these are Manhattan prosecutors making these claims. These are the charges. They say that Sam Bankman-Fried committed conspiracy for wire fraud, also wire fraud against customers, conspiracy to commit wire fraud against lenders, wire fraud against lenders, conspiracy to commit commodities fraud, conspiracy to commit securities fraud, as well as conspiracy for money laundering. And one that was less expected here, conspiracy against the United States and violation of campaign finance laws. We know that Bankman-Fried had been using funds from his entities to make campaign contributions. Now, from what I've read so far, and I'm not through the whole complaint, it looks like the main contention here is that the funds that were given, customer funds that were pushed over to Alameda, that those were the ones that were allegedly misused and defrauding investors who put their money in FTX. So these are very, very serious charges, and these are the charges that the Justice Department will be reportedly seeking possibly extradition. The last we heard from the Justice Department was they were likely seeking extradition. We would also be expecting some sort of an arraignment to happen where Bankman-Fried would have to come before a judge and be apprised of the charges against him before he's continued to be in custody.
And sort of in concert with the SEC filing and civil suit that we got earlier, which alleged that basically from inception of FTX and Alameda, it was using customer funds from FTX to fund the activities at Alameda. Presumably, you know, there are similar things in the complaint. One difference between the two, the SEC complaint is mainly focused on the entities that invested in FTX as a company, whereas the criminal charges also encompass fraud on customers of FTX.
Right. So customers, lenders being brought in here as well.
It's broader.
It's broader. And like you say, these charges, at least for the DOJ, they're saying in or about 2019, whereas the SEC was a little more specific, saying May 2019. But basically, since the inception of these companies, going all the way through to November 22, when the bankruptcy was filed. So very comprehensive. This is a lot of years. And as far as money amounts, I'm not seeing actual dollar amounts, which plays largely into a defendant defending their case and largely into if they are convicted of any of these charges, those have a lot to do with the sentence ultimately. So we'll be looking for more information. I'm just not seeing that here in these pages. This is a very, as you can see, it's not very many pages here for such significant charges.
All right, Yahoo Finance's own Alexis Keenan helping us break this down from the legal angle. And of course, this just unsealed this morning too. So we'll continue to really dig through some of the details here. Thanks so much, Alexis. And everyone, coming up, FTX faces the U.S. House on its collapse, but it's just going to be the CEO of FTX, the new one. And this is a live shot of Mr. John J. Ray there in Washington, D.C. We're going to break down what to expect from the hearing as it gets underway next.
Welcome back to Yahoo Finance on this very busy day for investing news. I'm Brian Sozzi here with Julie Hyman and Brad Smith. Markets are still sifting through today's weaker than expected reading on the consumer price index ahead of the Fed decision tomorrow. Right now, we're seeing a strong rally across the board. The Dow, S&P 500, all in the green, led by the Dow. Now, here's what's on tap this hour. Inflation deep dive. We'll get more analysis on today's important CPI reading with two top forecasters. And not the year of crypto as markets continue to track the fallout of FTX. One bearish crypto analyst will join us. And a big order. United Airlines places a historic order with Boeing. We'll have my chat with United CEO Scott Kirby in just a few minutes. Brad, over to you.
All right, thanks so much, Saz. Taking a look at the Dow Jones Industrial Average here as we're about 34 minutes into the start of trade on the day. We've got the Dow up by about 1.5%, 500 points to the upside on the Dow. Nasdaq Composite tech-heavy average, you're seeing that up a little more than 3.1%, 3.2%. We'll round that off too. And then additionally checking in on the S&P 500, you've got that higher by about 2.3%. Was up triple digits earlier, but we're still within that general ballpark, up by about 92 points right now. Let's also take a look at some of the sector activity that we're keeping a close eye on. Out of the gate, we had all 11 S&P 500 sectors in positive territory, and we've still got that very much the case here on the day. Technology up 3.3%. You've got communication services up 3.75%. And then additionally here, some of the other major leaders, real estate even getting in on the fun on the day. It's up by about 3% in a broad-based rally here that we're seeing in reaction to that CPI print that came out earlier this morning. And then just lastly, let's ride out with a quick look at the Nasdaq 100 as you're taking a look at some of those mega cap tech stocks. You've got some larger gains. That kind of mirrors what we saw with XLK, but Apple, Microsoft, Google, Amazon, they're all higher on the day, and handedly we'll see if we hold on to those gains and if it continues to accelerate. Julie?
Yeah, Alphabet up 6%. That is a big one. Well, we going to get to more on CPI in a moment, but first, the U.S. House hearing on the collapse of FTX. It's underway on Capitol Hill. You see a live shot there. This, of course, follows the arrest of FTX founder Sam Bankman-Fried in the Bahamas yesterday. Yahoo Finance crypto correspondent Jennifer Schonberger joins us now for what to expect. And we see there a picture of John J. Ray, who is the current sort of administrative CEO of the company.
Good morning, Julian. What promised to be a blockbuster hearing on Capitol Hill this morning, Sam Bankman-Fried will no longer testify before the House Financial Services Committee after the former CEO of FTX was arrested Monday night on criminal charges of securities and wire fraud. This coming after the Securities and Exchange Commission filed a civil lawsuit saying that he diverted customer funds from FTX.com to affiliated hedge fund Alameda Research. Now, House Financial Services Chairwoman Maxine Waters saying in a statement last night, quote, although Mr. Bankman-Fried must be held accountable, the American public deserves to hear directly from Mr. Bankman-Fried about the actions that have harmed over 1 million people. She goes on to say the timing of this arrest denies the public this opportunity. While I'm disappointed that we will not be able to hear from Mr. Bankman-Fried, we remain committed to getting to the bottom of what happened. Now, while Mr. Bankman-Fried is no longer testifying today, FTX's current chief executive, John J. Ray III, will appear before the committee. He will say in opening testimony that, quote, the FTX group's collapse appears to stem from the absolute concentration of control in the hands of a very small group of grossly inexperienced and unsophisticated individuals who fail to implement virtually any of the systems or controls that are necessary for a company that is entrusted with other people's money or assets. Now, Ray will list a number of unacceptable management practices that were engaged in FTX, notably the commingling of assets and the ability of Alameda to borrow funds held at FTX to be used for its own trading without, he says, any effective limits. While Bankman-Fried won't be on the hot seat today, lawmakers will still be looking for answers. Bankman-Fried has made a number of appearances in the media in the past couple of weeks and been quite vocal on Twitter against the advice of his lawyers. He told the New York Times that he did not try to commit fraud and denied knowingly commingling customer funds. We'll see what John Ray tells the committee this morning. Back to you.
All right, that's Yahoo Finance's own Jen Schonberger. Jen, thanks so much for tracking the hearing today and breaking all that down for us as that has commenced here. Getting back to the markets, as we're seeing this continued rise in the major averages and in the equities markets on the back of that CPI print. rising just 0.1% in November, below the expected 0.3%, which is the smallest increase monthly in over a year. Joining us now to discuss, we've got Joe Lavorgna, who is the SMBC Nikko Securities America Chief Economist, alongside Lakshman Achuthan, who is the Economic Cycle Research Institute co-founder. Gentlemen, thanks so much for joining us in studio today. A lot to get to. Lakshman, I want to begin with you because you say that this is really rear view mirror type of data that we're looking at, and it is. So where do you believe that inflation is heading from here, given this print that we saw, and does it suggest that it's heading in the right direction for the Fed to pivot their strategy?
Yes, to the last part of your conclusion. It's heading in the right direction. So the peak in inflation is in, and I think we can lay that to rest. The problem is it's sticky. It's going down, I think, not fast enough for the Fed to do any pivoting anytime soon in terms of actually cutting rates, sure. Right? What we're hoping for, I think what the market is hoping for, and they sometimes get out over their skis on this one, is that there's light at the end of the tunnel and they're going to cut really soon. It's going to take a much sharper drop in inflation for that to happen, and I think we'll get there, but the problem is that'll be with a recession, because a recession really brings down those prices very fast, and so be careful what you wish for. And even in today's numbers, which are lower than expected, definitely helped the doves on the FOMC committee. There are a few flies in the ointment, right? When you look at core services inflation, it's a little hotter than expected, and so the culprits are easy to see. It's wages are holding in there, and rental prices, housing inflation.
And I want to ask also, Joe, is it not only about extrapolation for the Fed? Of course, that's what mostly the market focuses on. But there's sort of a personal and consumer aspect to this as well. In other words, everybody here at this table is happy that prices are not rising as fast. And are there any implications for consumer spending?
There are implications for consumer spending. I mean, broadly in the first half of the year, the economy shrunk because inflation ran higher than expected. You are seeing real incomes compress. Living standards have fallen. That's why if you look at University of Michigan, it shows a recessionary reading. In terms of its level. If you look at the percentage of households looking for unemployment to go up next year, it's at a very high reading, to Lakshman's point about recession. So prices will come down. They are sticky, but they will come down if there's a recession, as I believe there will be. But for me, the Fed pivot might come a little bit sooner because I look for the labor market to weaken sharply, and my guess is the Fed will fold. They won't be as tough talking as they sound at the moment. Once the unemployment rate goes up into the low to mid fours, my guess is they'll start reversing.
Lakshman, do you think this data point gives the Fed, the breather or the room to pause, maybe earlier than the markets expect?
Pausing I think, sounds a little, it's like a bridge too far. I think slow. Which is kind of baked
25 basis points at the February meeting.
Or 50, I don't know. Powell's coming out tomorrow. Look, Powell does not want to be the second coming of Arthur Burns. He's made that crystal clear if you listen to him. And then if you think about Volcker, who famously came after and kind of broke the back of inflation, and this is Powell is studying this closely, right? And he knows that forecasts are rough. That's why he's kind of moved away from past forecasts and says, I want to see actual CPI falling. Now it is, but is it falling enough? Probably not. It's a little sticky. 7's a big number still. And then Volcker, I think, published a book called, the title was Keeping at It. Okay? So I don't think you're getting a big pivot very soon unless, as to Joe's point, you have the recession biting. If the recession's biting, look, if you're at a 4 handle on the unemployment rate, that's another way of saying you're in a recession. And that can give you some cover to pivot. Something could break. That could give you cover to pivot. But a 7.1% year-over-year CPI is not enough cover to fully pivot.
We had a guest earlier, Amanda Agati of PNC, say that this is the perfect storm of macroeconomic conditions, Joe. And if this is the perfect storm of macroeconomic conditions, what would it take for that to really begin to subside from your perspective?
I'm not sure what she meant by perfect storm. I mean, it's a very volatile, interesting market. It seems to me that The problem the Fed has is that as the market discounts a pivot, financial conditions, at least as measured by indices like the Chicago Fed, for example, are actually easing. So you've got financial conditions now by that metric, whether you believe it or not, it's another story, but that metric is telling you financial conditions are as easy today as they were when the funds rate was just 1%, which comes back to Lakshman's point about what does Powell say, because the more the equity market rallies in anticipation of the pivot with the weaker dollar and lower interest rates, he has a tougher job to do. But is that a perfect storm? That I can't say. The Fed's job has become more difficult. And unlike Volcker, people have to realize Volcker, when rates went up, the market technically was setting those rates. The Fed was very opaque back in the early 80s in terms of how they drove policy. The problem with Jay Powell today and this transparency is the Fed's going to be accountable for things that they can neither predict nor can control. So if I have to err on the side of where Jay Powell comes out, I'd probably say he's going to wind up being more like an Arthur Burns, because you could just imagine the political vitriol that's going to come up if we have a recession next year going into 24 with a presidential election.
I think this is a great point. The political pressure is huge. I mean, we know that, right? You've got an unemployment rate which is near record lows, and there's political pressure to stop doing what you're doing, right? That's kind of extreme. And that's our starting point. And so if the unemployment rate begins to rise noticeably, then the political pressure is going to get extreme.
Well, I mean, so you mentioned earlier that if we get up to 4% or so, that would be sort of the threshold. Is that the only thing that would give cover to Jay Powell to start to back off more meaningfully? Or, can he take cover under those loosening financial conditions or is there any other data that would be a trigger?
I mean, the unemployment rate, and Lakshman knows this, when it's up 50 basis points from its trailing low, it's always a recession. Assuming then if you're up at 4-something, 4.2, 4.3, 4.4, your non-farm payroll number is probably negative. And my guess is that, again, just like with CPI in the market, sees 1 week number anticipating 2. Now we've got 2. What happens if your next employment report, for argument's sake, is minus 100? Yeah. Maybe they don't go in February. I'm probably being too aggressive, but maybe they don't go in February.
Yeah, they're going to need some cover of negative jobs. I mean, look, 08 is interesting because you had negative jobs growth. You're 6 months inside a recession, and the Fed and the markets are looking at 100 basis points of hikes because GDP was still positive. Now we've got half a year of negative GDP, but jobs are positive. So we're like, there's no recession. I mean, even if people are calling for a recession, I know a lot of people are, there's like, it's later, or it's going to be mild, don't worry about it. And that's where you get really happy on the prospect of a pivot, right? I mean, also, lots of people have made this point, be careful what you wish for, because a pivot, the conditions for a pivot are obviously pretty bad.
Right, if unemployment's at 4.2 or 4.3%.
Yeah, they're obviously pretty bad. So now it's a betting game, like how bad is it?
Bottom line, you don't envy the Fed chair.
Hopefully it doesn't get that bad. I'll leave it there. Joe Lavorgna, SMBC Nikko Securities America Chief Economist, along with our very own, or our friend of the show, Lakshman Achathan, Economic Cycle Research Institute.
Did you just hire Lakshman?
No, I kind of did. I mean, a friend of the show. Love talking to this guy. I love him. Thanks, guys. Appreciate it.
Thank you.
All right, before I head to break, let's take a look at some restaurant stocks off a new Goldman Sachs note. Goldman Sachs analyst Jared Garber is out bullish on McDonald's, Chipotle, Yum Brand, Sweetgreen, Shake Shack, Darden, Jack in the Box, and Wingstop. A lot of names there. Garber likes the digital presence of all these brands. Garber has a sell rating for Cheesecake Factory going into 2023, along with Brinker International and Krispy Kreme. Coming up, Uber launches an investigation following a cyber attack on one vendor. Julie will discuss that, plus have more top headlines next.
Let's get down to business with some other headlines that we are watching. Uber is investigating a data breach after one of its third-party vendors, the IT asset management platform Tectivity, was hacked by a threat actor named UberLeaks. It leaked data claimed to be stolen from Uber and Uber Eats, consisting of source code, management reports, Windows logins, and email addresses and other data from more than 77,000 Uber employees. All of this, according to the website Bleeping Computer. Tectivity has notified law enforcement officials and hired a forensics firm to investigate. Chinese leaders have reportedly delayed a key economic policy meeting amid growing signs that COVID-19 infections are surging. This comes just 1 week after Beijing ended some of the world's toughest restrictions. President Xi Jinping and other government figures were expected to attend the closed-door Central Economic Work Conference this week to develop a policy plan for the strained Chinese economy for 2023. Infections are expected to rise further next month during the Chinese New Year when people travel across the country with their families. And Elon Musk is offering to sell insider shares of SpaceX at roughly $77 a piece. That's according to people familiar with the matter cited by Bloomberg. And that puts the company's valuation at about $140 billion. The valuation was $127 billion as recently as July, according to PitchBook. SpaceX is currently the most valuable private company in the U.S., dominating the market for commercial space launches. It sends payloads for NASA and other government agencies and ferries astronauts to and from the International Space Station. Well, coming up next, Yahoo Finance's Anjali Kamlani will speak with the CEO of Moderna after that promising data from its cancer vaccine study with Merck. That's next.
Welcome back to Yahoo Finance Live. I'm senior health reporter Anjali Kamlani. A potential vaccine for some forms of cancer showing promise following a study and is heading into additional testing. The breakthrough announced by pharmaceuticals Moderna and Merck just this morning. The preliminary trial is a result. Results are a breakthrough both in mRNA technology and cancer. Joining us to discuss this, CEO Stéphane Bancel of Moderna. Stéphane, thank you so much for joining us today. Pleasure to have you back on.
Thank you. Good morning. Thank you for having me.
So let's talk about this really exciting morning for you. Less than 2 years after you prove the mRNA concept, you now prove again potential further uses of it. Tell us about this breakthrough with the skin cancer personalized vaccine with Merck.
Sure. So as you know, we built this company believing it will be either a failure or a company with a lot of drugs. It made no sense to us scientifically this would be a one-drug company, because mRNA is an information molecule. And so we are very excited today, first for patients, to bring this incredible new clinical data. What we did is because of the advance in the medical field, is we wanted to test the hypothesis at the time, could we teach your T cell in your immune system how to recognize the cancer, your cancer, that they were missing? Mm-hmm. And so we say we need to run a big experiment in the clinic to test it against the best drug in the market, Keytruda from Merck, and to see, can we do better or should we go home? And so we did a very Moderna trial, it was powered, meaning enough people to know a true answer. It was randomized, like a good study should be done, and the control arm was Keytruda. What we showed this morning is we showed a 44% reduction of risk of recurrence of cancer or of death versus Keytruda. That's a hazard ratio of 0.56. That is higher than my best expectation. And we know it's real. Why? Because the p-value of the study is very, very low. It's 0.0266, very, very low. So it's real. So what is exciting for us is we're going to go very quickly into a phase 3 to get this drug in melanoma to patients as fast as we can. But what's even more exciting to me is we've proven the mechanism that Moderna's mRNA technology can teach cancer patients T cell how to recognize cancer. So what does that mean? That I believe this should be used in many more cancers. And so we're working with Merck to look at what are all the other cancers we should run directly phase 3 in parallel, like Merck did way back then in Keytruda, to try the technology in many, many more cancers, because we think the mechanism should hold. And that's why having a strong balance sheet, we have $17 billion of cash, is amazing at this moment, because we're going to invest in many, many trials in cancer, many billions of dollars of R&D, but also invest in manufacturing so that we can build plants around the world to deliver in just a matter of weeks a drug just made for your cancer.
Yeah, let's talk about that, because obviously, you have a partner now. You started off with the COVID vaccine alone and building out that infrastructure, including for manufacturing. And so now you're looking at a partner with Merck, which has invested $250 million in this, but is going to be sharing as well on the profits. And you're also taking charge of that manufacturing yourself. So how does that fare differently? And what are you looking at ahead in terms of timeline with all of this on your plate?
Sure. So we partnered with Merck because of Merck's leadership in immuno-oncology. Keytruda is an amazing drug, has done wonderful things for patients, but it doesn't work for everybody. And so the question is, how can you, combining with Moderna's technology, have a better outcome for patients? That's what we shared this morning. So with Merck, what we're going to do moving forward is share the R&D cost for all the phase 3 we're going to do, which is going to be many of them, and it's going to cost several $1 billion to run all of these over the next coming years. We're going to set up the manufacturing piece to make a personalized product, because it's very different than to make a very big pot of mRNA like we did for the COVID-19 vaccine. We need to make a lot of little quantities for every patient, a different product for everybody. And on the commercial front, we'll share the cost, and the profit will be shared 50-50. So it's just part of Moderna's platform coming into music. We have now around 30 vaccines that are in development, infectious disease vaccine. Today, we announced a big pillar in oncology with Moderna with really amazing data. I think this is like immunotherapy 2.0. The checkpoint, the PD-1, PD-L1 was 1.0, but I think it's a new revolution in immunotherapy. We shared at our R&D Day in September very promising data in rare genetic disease in the liver of kids. We have cardiology data up to phase 2 in our VEGF program. And yesterday, our partner Vertex announced that the FDA gave them a green light to go into the clinic to test mRNA inhaled for cystic fibrosis as a start, but we could use that technology inhaled for a lot of other respiratory disease. And so the Moderna platform is really coming together and we're very excited for what it means for patients.
Absolutely. Talk to me about that, the market, because you're looking at, to your point, you have partners for other products in your pipeline. Merck is a huge partner, has many indications for Keytruda, so you have a lot of opportunity there. When do you anticipate you're going to start investigating this personalized cancer vaccine and some of the other indications?
So we want to start as early as 2023. So we're currently working with Merck to first start up the phase 3 for melanoma, for which we have the phase 2 data that came out this morning. And we are working with Merck to prioritize what are all the other tumors we want to go into with this combination of Keytruda and Moderna cancer product. We'll communicate those results as soon as we have it in terms of the plans. We will also publish the data, but we're already getting full speed. What I told our team when we get the data, I told the team it is like a January 2020 COVID-like moment for Moderna, meaning we know we have a technology, we have great data. The enemy this time is not a virus, it's cancer. And I want us to go with the same intensity, the same level of investment, and the same rigor to save every day that we can to launch, to do something as impactful for patients as we did with COVID-19. So many people are impacted by cancer today. And so every day matters to get those indications to commercialization, to make sure people around the world can benefit from this amazing medical breakthrough as fast as possible.
Yeah, and just to clarify for people that don't know, this is being provided to patients or given to patients in combination with Keytruda after surgery, and that's why it gets that vaccine indication, right? What about earlier stage, and what about, pre-cancer? Are we looking at moving in that direction? Does this set the stage for that?
So pre-cancer, not with this current approach, because we need a tumor to be able to sequence it and to read where are you mutation of your cancer. But you're right, we can go earlier in cancer type. We can also go later in terms of metastasis potentially. We could potentially try where Keytruda has not worked, because maybe Moderna and Keytruda together might give some result for patients. So there's a lot of opportunity to try here. And again, we're going to be quite aggressive in trying a lot of things in cancer, because the safety profile is very similar to Keytruda alone, which is another big breakthrough that we're not talking enough about. As you know, in immunotherapy, a lot of combination drive a lot of toxicity issues. But the safety profile is very similar to Keytruda alone. We showed at ASCO, the big oncology conference a few years ago, very good safety profile. It's exactly the same technology as Spikevax. So when you think about it, from a medical standpoint, it's quite amazing. Mm-hmm. It's the same chemistry to make the mRNA. It's the same chemistry for the lipid around it. And it's the same manufacturing process. So this is where you see the power of a platform playing out here.
Yeah, and I know that you made a name for yourself with looking at clinical trial diversity. I'm assuming that you're going to look at that as well. But also, I wonder, about how you're planning on moving ahead when it comes to, the targeted population. Are you planning on, advancing some of that clinical trial focus?
100%. So if you want, now today, the good news is because the technology we adapt for every cancer, we can go after a lot of different variety of cancers. We might also look into earlier things, that are very, very early. So it's just things we're going to explore is, can you go into liquid biopsy to start, looking for cancer cell and cancer signal way before you even have, a way to diagnose it with another technology. Because as soon as we have a cancer cell, we can design the product for you. We just need one. And so there's a lot of things with breakthrough technology in diagnostic space, in sequencing, that will enable us to do better. The other piece too, that we should not forget, is this is Moderna 2019 technology. We have made a lot of progress. So we want to incorporate that new technology, the update in the mRNA operating system into the product. So could we even do better than what we shared this morning? I think it's possible.
Absolutely. Well, we'll have to keep an eye on that. And certainly, I know it's too early to talk about this, but also on that price target. So we'll see how that all pans out. Thank you so much, Moderna CEO Stéphane Bancel.
Thank you.
Coming up, how the collapse of FTX will impact other crypto platforms. We'll speak with one analyst next.
This is a highly speculative asset class. These 10,000 projects, many will fail because entrepreneurs in all sorts of walks of business fail. Many will fail also because history tells us that we don't need and don't use microcurrencies.
That was the Securities and Exchange Commission Chair Gary Gensler suggesting many crypto projects will make it. And for 2023, Bank of America finds that less than 5% of fund managers expect crypto to perform better than other assets. That's according to their recent fund manager survey. Joining now to weigh in on the outlook for crypto in the wake of FTX's collapse is Mizuho America's managing director and senior fintech analyst, Dan Dolev. Now, Dan, to be clear, you cover the companies that are publicly traded, regulated entities by and large, not some of the smaller projects that Gensler was referring to. But it feels like, from a sentiment perspective, this is something that could weigh on the industry for a while. How are you viewing it?
Yeah, I mean, I kind of agree with Gensler, for a change. I think he gets it. I think this is, like the crypto, it's a solution for a problem that does not exist. And I think a lot of these very speculative tokens that are traded on these platforms, particularly Coinbase, which is kind of the money center bank for these things, right? That's kind of the biggest party for these things, and that's gonna be the one that's gonna be hurt most. So I totally agree with that. It's a solution for a problem that doesn't exist. Trading commissions are going to come down eventually because volumes are already coming down significantly, and it's kind of a perfect storm for cryptocurrency, and you're going to see that with the Coinbase valuation over the next 12 months.
Yeah, Dan, looking to next year, how do you see things playing out for Coinbase? What are you modeling for? Or how do you model the bottom line for this company? How do you model a fair valuation when you have situations like FTX just hanging over the stock and the valuation continually?
Yeah, so it's a great question. Look, we slashed our numbers dramatically last week. Let me just tell you, I think consensus is overshooting revenue by a magnitude of like 30% and overshooting EBITDA by like 65%. So people have them turn a profit next year. I don't think so. I think they're going to be unprofitable next year. On a good day, they might turn a profit in 2024. That's assuming things don't go further south from here. So how do you model that? We're not even modeling any take rate diminishing from where it is today. So we're still modeling around 19 to 20 basis points of overall take rate over the next 2 years. What you're basically seeing is volumes staying at where they are today, which is about $1.8 billion a day. That gets you to like a 600-ish billion number for the year. And then you take that and then you think about how much cost cutting can they do. The more cost cutting they do, the more profits they're going to protect, but also they can't grow the so-called ecosystem. So I think that's how we model it. And how do you value it? It's like, it's like a bottomless lunch at Olive Garden. I mean, there's no bottom.
Well, I like that lunch though. Wait, so I should like Coinbase shares, right, Dan?
I'm going to that lunch today.
Good luck.
We all may be if the economy continues to go in this direction right now.
Got to get value for our dollar there.
Looking for some deals. Dan, while we have you, you've said that you think crypto is dead. What does that mean for some of the companies that are in your coverage universe that are either holding crypto on their balance sheets or are hinging their growth prospects to crypto?
Yeah, I mean, I think that there's no better. There is no bigger victim of crypto than Square or Block, right? I think that what happened with Bitcoin, I think the over-focusing, the obsession, fixation, whatever you want it, on Bitcoin is actually a great story, right? The idea to sort of connect the three ecosystems between buy now, pay later, point of sale, and the Cash App, the next gen neobank. The problem with it is not the idea, the problem is the execution. So I think you're kind of preaching to the choir. The obsession or the management's obsession with Bitcoin is dragging down the whole story. So I think that's been, I would say, a significant percent of the derating that Square has seen is because of the Bitcoin obsession. So I think that's kind of the ultimate victim of this era.
But is it a justified victim? In other words, like the obsession is on the part of management, to your point. So I wonder on the flip side of that, are there any stocks that are getting hit by the perception that they're overly exposed to crypto and it's sort of not justified?
Robinhood, right? I mean, this is like, I mean, I've seen there's a downgrade today, I think, on kind of the FTX link. Robinhood is completely, I mean, look, they do trade, they do let people trade. And it's the least part, that's the part that I like the least about them is the whole Dogecoin thing. But I do think that there's other parts, right? There's like the glass half full. Most of their revenues, most of their profits are not done from crypto trading, right? And this is just one other aspect of a bigger slew of opportunities or things that you could do with Robinhood. Now they're offering retirement, for example. So crypto is becoming an ever smaller part of trading volumes and revenue, and equities, options, what have you, are ever bigger. That the problem is they're kind of, if you think about where they are and like the FTX or Sam's stake in Robinhood, I think they are unduly punished in this time. So hopefully that would kind of fix itself over time and they won't get that discount because of that link.
There are a lot of people that are seeking answers from the fallout of FTX and individual investors that are not even in crypto right now that want to see some of the smoke clear before they decide to even start to nibble at what this future of decentralized finance could look like. What would you say to them in the wake of all of this?
Decentralized finance is a great novel idea. The tokens are worthless. And I think we should distinguish between those tokens. I think Jamie Dimon called them pet rocks, right? The tokens, they have no value, right? That's the real bottomless lunch at Olive Garden. Decentralized finance is a great idea. And I think it has a lot of future, completely unrelated to those tokens. And I think that's what I would say to those people. Like that's the issue, is that they've gotten linked together, and the hope of decentralized finance is now somehow linked to the tokens. I don't think it's merited, and I think that's what I would say to those people.
All right, well, enjoy those OG breadsticks. Mizuho Senior Financial Tech Analyst Dan Aldalov. Always good to see you. We'll talk to you soon.
Thank you.
Coming up, we'll share my interview with United Airlines CEO Scott Kirby next. United Airlines has announced a new deal with Boeing to buy 100 787 Dreamliners, including an option to purchase 100 additional planes with delivery expected between 2024 and 2032. I spoke with United Airlines CEO Scott Kirby earlier this morning about the big deal.
You know, this really solidifies United's position coming out of the pandemic as the flag carrier of the United States and the leading global airline. And we really set this up going back a couple of years ago during the summer of 2020 in the middle of the pandemic, when every other airline around the world started shrinking, retiring fleets. We decided to keep all of ours. We always believed in the ultimate recovery of travel, started building new simulators, buying narrow bodies. This is really just the next step, a really big step, but the next step in solidifying that position as the leading carrier around the globe.
Yeah, before we get into the specifics of these planes, and they're really noticeable, increased premium seats, you name it, but the way I take it, this is a big bet that travel will continue to just come back, perhaps in a big way from the COVID-19 pandemic.
You know, it perhaps is not as big a bet as you think, because the first 100 airplanes are really replacement. It's straightforward economics to replace a 30-year-old airplane with low fuel efficiency with a new modern aircraft. The 100 option aircraft, we think we will take all of those, but because they're options, you know, we can watch the market development. We're expecting mid-teens margins earnings on each of those airplanes. And if they're delivering on that, which we think they will, then we'll take all of them. But we don't have to take all of them. And so, you know, it's a bet that it's an option on a really strong recovery, which we think is what's going to happen, but not a requirement if the recovery is less robust than we anticipate.
You know, it's not lost on me, and I'm sure a lot of investors, this order, a significant order, comes at a time where the economy is slowing around the world. Do you see any pre-recessionary indicators in your business as you look into next year?
You know, demand is really strong for us right now. And I think what's happening is this is really more a return to normalcy in the economy. So hard goods, online, you know, which went crazy during the pandemic, are coming back down to normal, while services, travel, restaurant, getting your haircut, really got crushed during the pandemic, and we're coming back. So the economy feels pretty good to us. If you squint hard, you know, we could find places where some business travel, particularly tech, has slowed down and really never really started traveling. So I guess you could squint hard and see what I would call pre-recessionary behavior, but there's so much other good stuff, particularly hybrid work, making every weekend a holiday, leading to just structurally higher travel, that for us and for air travel in general, you know, we just see we're setting records every month on travel demand.
Scott, I'm a bit of a plane geek, and I'm jealous that you're in that hangar with those big, beautiful planes behind you. I wish I was there. Seeing these, how do these planes, do these orders change the investing profile of a United Airlines?
You know, if you're an investor, I think that it's an underappreciated story for United Airlines, really for aviation in general. I think we have structurally higher demand because of hybrid work, making every weekend a holiday. And we have an environment where industry supply, both domestically and internationally, is going to be pretty severely constrained because of pilot shortages, aircraft shortages. You know, as great as this factory is, both Boeing and Airbus are behind and are going to probably be behind for several years on building airplanes. Air traffic control saturation. All of these things mean that supply is constrained. And economics 101, you know, better demand, lower supply winds up being really good for investors and airlines. And United in particular, because we saw this coming a couple of years ago, is so far ahead of the curve in terms of being able to take advantage of that in a way that no other airline can.
What's the level of confidence that Boeing has had its struggles the past 2-3 years, that they're going to be able to deliver you these planes on time?
Well, you know, our guess is that both Boeing and Airbus are not yet out of the woods in terms of the supply chain issues, and we don't expect them to be, you know, get 100% of deliveries on time for us or for anyone else. For what it's worth, it's not just Boeing; it's the whole supply chain. And both Boeing and Airbus are doing a really good job of trying to help the supply chain get caught up. I think the biggest constraint is probably going to wind up being aircraft engines. When all is said and done, it's a constraint today. Though that's probably going to be the longest pole in the tent as opposed to the actual airframe.
Within these new planes, take us through how the experience from a consumer standpoint might be different compared to what you have in the air now.
Well, yeah, thanks. These are beautiful airplanes, and everything about them is modern and refreshed, from the Polaris seats up front to the large, you know, premium economy cabin, the economy plus cabin, but larger overhead bins, you know, Wi-Fi, newest generation of Wi-Fi. just everything about them, the 787, all the interior, the larger windows, the air on the airplanes, everything about them improves the customer experience.
Are ticket prices just going to have to go higher?
Well, they are not because of this, because these airplanes actually wind up being cheaper to fly than a 767 because they're new generation technology. So not only are the interiors better for customers, but the cost profile is a lot better with modern technology.
I think what's getting lost in the headline of these orders, Scott, is how many people you plan to hire next year. Take us through that number and where will this hiring be?
So we're going to hire about 15,000 people next year. We're hiring 15,000 people this year as well. And that's kind of the trend of where we're going, given the growth that we have. And it's really happening across the board. It's about 2,500 pilots, it's about 4,000 flight attendants. And it's really a great opportunity to refresh and bring in, a culture, an exciting growth culture. I mean, it's just so good for all employees. And that's a big part of making our employees feel proud. It's the most important part of our product are our people. We say we're about connecting people and uniting the world. They are the most important part of what we do to get people where they want to go and make them feel good about the experience and having growth opportunities for them, both for the company and that means growth opportunities for them personally, really is exciting for everyone at United Airlines.
And that was United Airlines CEO Scott Kirby on a big day for him. Lots of Boeing orders and worth noting Boeing still the top ticker on the Yahoo Finance platform. Coming up, we'll do a final check of the markets after that cooler than expected CPI report. That's next.
We've been watching markets come off the highs a little bit, and particularly you guys, we've been watching Tesla on the headline that Elon Musk is no longer the world's richest man. That is Bernard Arnault now of LVMH. You can see Tesla in the middle of the screen there. It's red. Not a lot red on that screen.
Yeah, jewels, fragrances, and whatever else they have. Drinks, yes, all the goods.
Bad week for Tesla. It just continues. We saw that slide yesterday. That sell-off continues.
All right.
Coming up in the next hour, Kiko Fujita and Rochelle Akufa will continue our coverage of the crypto hearing on Capitol Hill following the arrest of Sam Bankman-Fried. Keep it right here on Yahoo Finance.
Welcome to Yahoo Finance Live. It is 8 a.m. on the West Coast, 11 a.m. on the East. I'm Akiko Fujita with Rochelle Akufo. Here's what we're watching at this hour. Hit from all sides. The SEC, the CFTC, and federal prosecutors all slam FTX's Sam Bankman-Fried with a litany of charges. The criminal counts include wire fraud and conspiracy. We speak with the former Southern District New York prosecutor on the next steps. Pressure building. Binance freezes withdrawals of the USDC stablecoin after reportedly seeing an exodus in the amount of $1.9 billion in just 24 hours. We're going to be asking a federal or former Consumer Protection Bureau director for her take. And the anti-inflation bandwagon. Stocks pick up steam on cooler than expected inflation. Benchmark yields drop and tech shares jump. But are we getting carried away ahead of Jay Powell? We're going to be looking ahead to the FOMC decision tomorrow. But first, let's do a check of all three major indices right now, trading higher in the wake of that CPI data. As we saw this morning, consumer price index rose 0.1% in November. We're talking about 7.1% increase year on year. That was less than expected, and we have seen a pickup in those stock, although they are coming off of the highs of the session. The Dow is up 230 points, the S&P 500 up 57, and the Nasdaq up 235. Let's do a quick check of how Treasury yields are trading right now. Certainly going to be in very close focus here with that FOMC meeting underway. But all three Treasury yields down right now. The 10-year yield at 3.45% and the 30-year yield at 3.48%. Rochelle?
And usually it would be inflation, but we're starting with the story of the day, which is Sam Bankman-Fried, who's been arrested and indicted, charged with defrauding investors of $1.8 billion. The detention happening the day before he was set to testify before Congress on the fall of FTX. We have Yahoo Finance's Alexis Keenan now with the details of the story.
Hi, Rochelle. So the latest what's going on here in these multi-litigations is that the Department of Justice coming from the Southern District in New York, that's the Manhattan prosecutors, they have filed an 8-count complaint against Sam Bankman-Fried, who has been arrested as of yesterday evening in the Bahamas. And he is being held currently on these particular charges. This is the indictment that came down from a grand jury, a federal grand jury. Conspiracy to commit wire fraud, wire fraud against customers, conspiracy to commit wire fraud against also lenders, wire fraud against lenders, conspiracy to commit commodities fraud, also conspiracy to commit securities fraud, conspiracy to commit money laundering, as well as conspiracy against the United States by way of violation of campaign finance laws. So that is what the Department of Justice is saying that comes in connection with a complaint that we saw earlier filed by the SEC, alleging violations of securities laws, U.S. securities laws, and also a complaint coming down from the CFTC. Now, we have been listening to FTX's CEO, current CEO, John J. Ray, testifying before Congress. He's testifying before the House Financial Services Committee, where Sam Bankman-Fried had been also scheduled to testify, but of course now is not given the arrest. What John J. Ray has said so far, I just want to summarize some of the highlights here. He was asked about whether there was any distinction between FTX's various entities. He said no, there was no distinction virtually at all between FTX and Alameda, that the executives had free rein to have money flowing back and forth between those companies without any oversight. He also talked about how much money so far has been recovered for the victims of this alleged fraud. He said approximately $1 billion at this point has been secured in cold storage wallets. He also said that he was asked to elaborate why this fraud, he has said in the past, is worse than Enron, a bankruptcy that Ray also oversaw. He said that the fact that there was no record keeping whatsoever by FTX and its related entities was very problematic. It is making it really difficult for them to figure out exactly where the money flowed and exactly what happened. He said that invoices and expenses were communicated by employees through Slack. He said the company was using QuickBooks for a multi-billion-dollar company. He said that's nice, but not for a multi-billion-dollar company. Also, he had been asked whether he was cooperating with, whether FTX's current leadership is cooperating with U.S. authorities and regulators. He said, absolutely, yes, we are in cooperation, and we will continue to do so.
Alexis Keenan with the very latest there. Thanks so much for breaking that all down for us. Rochelle, it has been interesting to listen in on this hearing today on the back of what it sounds like was a pretty big surprise for lawmakers. Sam Bankman-Fried's arrest last night over in the Bahamas. You heard Maxine Waters saying the public has been waiting eagerly to get these answers under oath before Congress. The timing of this arrest denies the public this opportunity. Now, some interesting comments coming from John Ray, as Alexis pointed out, but I want to point to what Patrick McHenry said. He is, of course, the congressman from North Carolina who said, we've heard everything but the truth, alluding to what we have heard from Sam Bankman-Fried so far, saying this is really just old school fraud with new technology. In other words, for all the talk about how crypto is unregulated, how they're what's kind of like the Wild West, he's saying essentially, this is not a new story. This is just masked in new technology. It's going to be interesting to see how this all plays out, obviously, along with the legal track as we keep a close watch on what's playing out over in the Bahamas as well.
And when you think of how much of a turnaround this is, because obviously SBF was considered a wonderkind in this industry, someone that lawmakers were listening to. So now to see him now on the flip side of this, and we heard from FTX's new CEO, John Ray, as he was going through the details, saying that the company was using QuickBooks, a multi-billion-dollar company using QuickBooks for its accounting. He said, no offense to QuickBooks, but this isn't the sort of accounting you should be doing for a company of this size, trying to understand what's been happening, as we're seeing here with these commingled funds, allegations of commingled funds, and who really had oversight at the end of the day of these multiple entities. And so this was a big surprise, as you mentioned there, from Maxine Waters. A lot of us were wondering what was going to happen because we were all bracing, waiting to hear him testify today. So as you mentioned, that the public really robbed of that opportunity because really the only person who can answer these questions is the one person who isn't there.
Well, and you point to that question at the heart of all of this, which is, did in fact FTX and Alameda, which are both owned by Sam Bankman-Fried, did they commingle the funds? John Ray was asked that point blank by lawmakers in this hearing, and he said this operated as one company. There was no distinction between FTX and Alameda. Certainly going to be the line of question we expect, not just within this hearing, but also directed at Sam Bankman-Fried as well. We're now looking at, as Alexis pointed out, charges from the SEC, although I thought that was kind of interesting, Rochelle, that they did go after more of defrauding the investors themselves, not necessarily the customers of FTX. And then, of course, we had this unsealing of this in the federal indictment, which is, of course, what Sam Bankman-Fried was arrested under. So a lot to break down here, but let's bring in our panel for the hour. We've got Kathy Kraninger, former director of the Consumer Financial Protection Bureau. We've also got Ishwar Prasad, Talani Senior Professor of Trade Policy and Professor of Economics at Cornell University. Ishwar, I want to start with you here because I know you've been watching this space very closely. We've heard so many people say that this isn't really about crypto at the end of the day. It is about the company FTX, how they operated. Give me your reaction first to the charges that we have seen come down so far.
It is about crypto in one very important way, because if you think about crypto as an asset class, the basic requirements of an asset class are that you be able to keep those funds someplace safe, and there is custody those accounts in a safe place, and to be able to trade those assets. That's what FTX was supposed to do. It was supposed to custody accounts and also allow for easy trading. Now, it turns out that the very basic elements of this asset class cannot be easily sustained because FTX was supposed to be the safest part of the operation. What we are learning now is that a lot of crypto, while it is meant to be decentralized, is in fact heavily centralized through these exchanges, which are hardly decentralized by any measure. And while the notion of decentralization was supposed to remove these single points of fragility or vulnerability, what we are finding out is that the centralization actually leads to a lot of vulnerability. So the notion that crypto is a sector that can essentially escape the basic precepts of economics, finance, and corporate governance, that has certainly been put to the rest by the travails that FTX is undertaking, and also the fact that investors and consumers who are willing to go in with their eyes blind and essentially got taken in by the razzle-dazzle of the new technology and did not do their due diligence is certainly very worrying for the prospects of this entire industry.
And Kathy, Ishmael raises an important point there, not centralized in the sense that it's banks, but when you have it centralized around a particular exchange or a particular personality like an SBF, what does that actually do then to really the credibility of the industry? And especially as you have these parallel investigations going on with the SDNY, the SEC, and then of course, the Commodities Futures Trading Commission as well.
There is no doubt this is a huge blow to the credibility of this industry. Someone who purported to be a true leader, who had a vision for a regulated industry, and who was a responsible player. And now, obviously, the wool is being pulled off of everyone's eyes here. And it looks like a classic case of fraud and greed, and certainly has all of the soap opera qualities of a story that just is unbelievable, frankly. And I will echo the absolute need for due diligence. I mean, the investors, it's clear, did not do some of this, but you also get to the malfeasance versus negligence. That was the story that we've heard a bit in the media versus what you see in the indictments and in the SEC and CFTC allegations as well. So all of that is definitely going to be playing out here in the future, and people will be looking closely at it. But I would say, yes, trading in crypto today is largely centralized. It's a matter of scale and other aspects of this. But you must have, as a company, I mean, when you're purporting to put out and custody assets for clients and putting out a product to the public, you have to disclose information. You have to have internal controls and risk management procedures. The things that you assert, need to be true. And so this really, I'll use Chair Gensler's words, it's clearly a house of cards that fell about itself and harmed a lot of people.
Yeah, Kathy, it's been interesting to see all the finger pointing in the aftermath of this. You heard lawmakers in this House hearing that's happening right now point the finger at the SEC, saying there wasn't enough enforcement. We heard from Chair Gensler last week on our air on Yahoo Finance saying that this isn't necessarily about new regulation, that there can be enforcement mechanisms with the rules on the books right now. And then you've got the CFTC saying we don't have enough right now of a mandate here to go after some of these companies. How do you see it?
So I will say the FTX situation is distinguishable from many of the questions about how this ecosystem and this industry should be regulated. As I said, and that will play out. That will play out in courts, in the criminal proceedings, as well as, unfortunately, the bankruptcy filings and otherwise. So we're going to see the risk management, corporate controls, governance, was not there that should be there, and that distinguishing that. But the question of what are the regulatory frameworks that should be in place for this ecosystem? Congress needs to act. There are some infrastructure dimensions, like around stable coins, and how they are backed and reserved, and making sure that that is overseen. Some questions about, again, spot market oversight, and really bringing in a regulator that can do that oversight, like the CFTC. So those are things that Congress will put into place. But it is important to note to the public, that's why you're seeing criminal allegations here. There was fraud. That is illegal.
And Ishwa, it does seem to be a case of playing catch up. When is sort of regulation by enforcement going to stop being the norm? Because we keep hearing there's regulations on the books, but yet these things keep slipping through.
Yeah, I think that is still
you're absolutely right. I'd say that the regulatory dimensions are important. Oh, please go ahead.
There is a real quandary here about whether existing regulatory frameworks are going to be sufficient to regulate what seems to be a new or is purported to be a new asset class, or if a fundamentally different framework is needed. And I think we are moving towards some sort of resolution, but there are basic definitional issues that still need to be sorted out. So for instance, is a stable coin really a security or a commodity, or is it a narrow bank, or is it a money market mutual fund? These are really important, but basically I think we are dealing with more fundamental issues related to corporate governance, related to, as your other guest mentioned, sheer fraud. So I think in this case, we have a combination of greed, hubris, and sheer incompetence. And the question is how we can protect investors and financial markets more broadly from this sort of obvious malfeasance. It's going to require a combination of, I think, existing regulation being enforced in a much more effective way in this new sector, but also some new elements of regulation that require oversight in areas which seem to be decentralized, which seem to be very transparent, but where in fact there is much less transparency than you might believe. I think there is certainly movement in Washington, but given how large the sector has become, how there might be potential spillovers to the traditional financial system, it's certainly going to be important for Congress, as your other guest pointed out, to move quickly rather than leaving it to the regulatory agencies one by one to try to figure out what to do within the existing regulatory parameters.
Kathy, you agree?
I do. I think Congress needs to act. And to your point about regulation by enforcement, it absolutely goes after bad actors, but it does not provide clear requirements to those who are seeking to be responsible market participants to offer services and the opportunities of this new technology. So having a regulatory framework that's clear, having the industry working closely together and putting these measures into place around oversight are really important and valuable for the future.
Well, I know these will be conversations we'll continue to have. A big thank you for joining us. Kathy Craninger there, former director of the Consumer Financial Protection Bureau, and Ishwar Prasad Tolani, senior professor of trade policy and professor of economics at Cornell University. Thank you both for joining us. All right, well, former FTX founder Sam Bankman.
Now facing, we should point out, SBF now facing a litany of criminal charges. We're going to be speaking with former Watergate special prosecutor Nick Ackerman about the significance of those charges coming down from the SDNY. That is a conversation coming up in about 30 minutes or so. You certainly don't want to miss that. Well, a breakthrough in a major cancer vaccine is leading to a big rally in shares of Moderna. Take a look at that, up more than 20% there. The drug maker announcing that its experimental melanoma vaccine reduced the risk of relapse or death from melanoma when it was combined with Merck's treatment Keytruda. Now, specifically, it cut the risk of recurrence in skin cancer by 44%. The results mark the first key use of mRNA technology in cancer therapy. CEO Stefan Bancel speaking to our team on Yahoo Finance this morning. Here's what he said about how the company is going to put its strong balance sheet to use.
We're going to invest in many trials in cancer, many billions of dollars of R&D, but also invest in manufacturing so that we can build plants around the world to deliver in just a matter of weeks a drug just made for your cancer.
Moderna and Merck plan to move the study to its final stages next year. Well, coming up after this short break, planning over prediction. The state of inflation in 2023 is looking hard to gauge. So our next guest says, be ready for all the contingencies. We ask what those are, and we look ahead to the Fed next.
When the VIX is high, is it time to buy? Well, apparently so, but what about when it forms a death cross pattern? Well, let's break down the inner workings of Wall Street's fear gauge with our very own Jared Blickery. Hey, Jared.
That's right. Normally, you wouldn't think risk on when you hear the term death cross, but in fact, we use that term not only with the S&P 500 and indices and stocks, but with the VIX. And since the VIX moves generally opposite the direction of equities, well, when you have a death cross, that's probably when you want to buy stocks. Now, here we're looking at the VIX Volatility Index on a year-to-date basis, and you can see it's been trending lower all year long. And I've prepared a chart here. We have the S&P 500 in the upper graph here. This goes all the way back a couple years, and we have the VIX all the way down here. That big spike is a pandemic spike. And I have the 200-day and the 50-day moving average here. And I did a little study. The last time we got the 50-day moving under the 200, which is what we call the death cross, and that's kind of the signal that we're getting right now, we did have a buy, but I'll tell you what, it didn't make any money here. In fact, it lost money. Now, you go back to the one before that, the very last signal, that was in October, well, let's say August of 2020. That was a decent buy, and the sell did not come until right here. So kind of a mixed picture with respect to that signal. But I just want to take a step back here and look at the S&P 500. I don't think we need to overcomplicate anything. Every chart technician in America is looking at the S&P 500 over a one-year basis and is watching price action right now. It is at the Rubicon. If it breaks through here, we get a couple closes above, especially since we also have the 200-day moving average here. That would probably be an all clear. And of course, we have the big catalyst. We had CPI this morning. We got Fed Chair Powell tomorrow. So anything's in the cards here, but an incrementally bullish step right here by moving over this line and over these resistance levels today.
That's why we call you our chart master, Jared. Always charting these things for us. Thanks so much for that. Well, this morning's inflation reading came in softer than expected, up just 0.1% from the previous month. We did see stocks pop on the release. Well, now it's over to the Fed, which looks to set to hike rates again tomorrow, with a downshift of 50 basis points, widely expected. Approaching a new year with recession bets rising isn't what anyone wants, but the Fed and Wall Street do seem to be on different pages as to how 2023 is likely to play out. Morningstar's weighed into the debate with its outlook. It sees the possibility for stagflation and says the emphasis for portfolios should be planning over prediction. We are joined by Marta Norton, Chief Investment Officer for the Americas at Morningstar. Marta, good to talk to you today. Let me just first get your reaction to what we saw in the market today. We saw that CPI print come down, Dow futures popping on that. Are we back to kind of getting ahead of ourselves before we hear from the Fed tomorrow?
I think that's always a risk, Akiko, and thanks so much for having me. I think that's always a risk when we have huge market reactions to a single data point. Now, I do think there's some sense to a celebratory dance. The Fed has said that it's watching inflation prints closely. It's looking for tangible signs that we're at an inflection point in this war against inflation. And when you add November's print on top of October's print, and you see some of this cooling or some of this kind of pullback from these peak levels of inflation, I think there's good reason for the market to say that, potentially we could see the Fed back away from some of the extreme moves it's made on the rate side this year. But I do think that we want to be careful about extrapolating too much from one or two data points.
And we know that's the same feeling that the Fed has. They clearly want to see more consistent data that inflation is cooling. But we did see the headline number, as you mentioned, there's 7.1% for headline inflation, 6% for core inflation, and that's versus the 6.1% that was expected as well. For people who are trying to sort of plan for what to do with their portfolios, then what should they be looking at right now?
Well, I think there's two major questions, Rochelle, that the market still needs to grapple with. One relates to the labor market and seeing some cooling there, which hasn't really taken shape the same way that we've seen some pullback on inflation prints. And then I think the other thing that the market needs to grapple with, investors need to grapple with, relates to the impact of these Fed moves on the overall economy and what that means for a recession. So from our perspective, from the perspective at Morningstar, the range of outcomes remains fairly wide. And where we see inflation level off in the long run, what we see happen on the economic side in terms of a recession, those are sources of volatility for the market. And we don't necessarily have answers for those. So when we talk about planning over prediction, what we're really thinking about when it comes to portfolio construction is creating a range of different asset classes that can respond differently to different outcomes. So imagine an environment where inflation remains sticky. Tips in some areas of energy might, continue to make sense in a portfolio. At the same time, if you start to see disinflation and a cooling as we're seeing in inflation, we could start to look at some areas, in the value spectrum of equities or within fixed income that could do reasonably well in those environments. So it really makes sense in our view to have this kind of spectrum of asset classes that can do well in a range of different environments.
How do investors determine just what kind of exposure to have? I mean, you just put up 4 big scenarios. It could really go in any direction.
That's right. So uncertainty remains very high. So I think that the real wisdom here is not to plan for one particular environment. It would be really tempting if you start to see the market recover, you start to see these inflation prints start to cool off a bit, to really go hard into risk assets. So loading up on all types of risk, whether that's high yield bonds or whether that's equities across the risk spectrum. And our perspective is that it makes sense to take some caution and to move a little bit more slowly than you otherwise would, and not say that this is an all-in, putting all chips into the center of the table type of environment, but rather thinking about how is this asset going to do relative to that asset. And that's where the real nuance of portfolio construction comes into play.
And Marta, just quickly, in terms of some of the geopolitical, some of the international impacts that might be having on US portfolios, anything that people should be keeping an eye on or that might be under the radar right now?
Right. I wish I could say that question around international is an easy one to answer, but we also see some kind of mixed signals overseas as well. So valuations, the price that you're paying for the assets that you're getting, they look pretty attractive, whether you're looking at non-US currencies or whether you're looking at the actual local assets. And so I look at areas like China, I look at areas like the UK, like Germany, European financials broadly. All of those areas look pretty attractive to us when we take into account both the currency and the local assets. But as you note, there is some uncertainty over there when we're talking about the geopolitical tension, when we're looking at things like how the European energy crisis could play out, when we're thinking about some of the troubles that the UK has had. And so from our perspective, it makes sense to start to be overweight some of these areas. But again, to do so with a bit of caution or with a bit of kind of a steady hand. So not going kind of to a full overweight, but having some exposure because the valuation suggests that we should.
A cautious balance everyone should take then. Morningstar's Marta Norton, thank you so much for joining us this morning. All right, coming up, pincer movement. Japan reportedly joining the Netherlands in tightening key tech-related exports to China. Does it stop there, or does the so-called chip blockade gather more momentum? We'll discuss next.
Well, China is pushing back, the country filing a dispute with the World Trade Organization over chip export and manufacturing equipment controls imposed or under consideration from the U.S. and its allies. The complaint centers around recent moves from Japan and the Netherlands, both countries agreeing to limit the export of chips and equipment used to make advanced semiconductors. This comes in addition to existing U.S. bans on semiconductor shipments to China. And Rochelle, for those looking for some context on all this of course comes from what the U.S. came down with back in October, one of the most stringent export controls in place that prevented American companies without a license to export U.S. technology, export U.S. equipment, and then utilize American citizens to help develop chips over in China. Essentially, the U.S. saying, look, allies, you've got to pick sides. Japan and the Netherlands so far appearing to go along with the U.S., but there's one other big X factor in all this, which is South Korea. Samsung, SK Hynix, one of the biggest chip makers, and certainly China's foreign minister meeting with South Korea's foreign minister, they're trying to press them to say, don't go along with the U.S. rules, because that would really, really be kind of the death knell for China and their development.
When you think of how much China has really positioned itself to try and be the largest trade partner for so many countries, whether in Europe or as they are the biggest trade partner with the US, this does create a very, very difficult dynamic. And as you mentioned, China pushing back, the Chinese Ministry of Commerce confirming that China has initiated that dispute with the WTO. And this is about, so they want to see, they're accusing the US of obstructing normal international trade in chips and also abusing export control measures. And this comes as China is trying to build up its own industry at the same time. They're considering a $143 billion, that's a 1 trillion yuan fiscal package to really support its semiconductor industry. Now, this is supposed to roll out over the next 5 years, but it's also supposed to start kicking in, according to some sources at Reuters, in the first quarter of next year. So clearly, with every step, they're trying to match each other in this. There really is this global competition for who is going to be ahead in the next phase of the high-tech future. And we know that this is something that China is depending on for its next phase of economic growth.
Well, and you talk to those who follow this space very closely, every one of them will tell you that China is just not equipped to build out advanced chips right now without machines coming in from a company like ASML over in the Netherlands or from the U.S. And so if they're unable to do that, that essentially derails all those plans, Rochelle, that you just pointed to. On the WTO claim specifically, though, the U.S. has said very, very specifically that they don't believe the WTO is the place here to be discussing it, because they see this as a national security issue, not necessarily a trade issue. I'd imagine this is a discussion that's going to continue for a while. But to your point, there is a global competition for chips used in everything from our iPhones to cars. I mean, you name it. And that is why we are seeing so many countries who are taking part in this, really deciding which direction they want to go. And the U.S. trying to woo more countries on board with where they want to do, which is essentially to shut China out.
No, absolutely. I mean, it's a race that we did see coming. When you have the two biggest economies, they're going to butt heads. As much as they have, a dependence on each other in terms of trade, there is that competition, and it just seems to be getting heightened the further we get into the high-tech space.
Yeah, and semiconductors right at the center of it. All right, coming up on the other side, pause for thought. The world's biggest crypto exchange temporarily halts withdrawals of major stablecoin USDC. Are concerns over the stability of Binance warranted, or is a token swap entirely normal? We'll discuss next.
Binance now taking steps to get cash out of its exchange following concerns about its reserves after a report that claimed its Bitcoin was over-collateralized. Yahoo Finance's David Hollerith has the latest. Hey, David.
Hey, so Binance's CEO Changpeng Zhao has stated over Twitter about a little more than an hour ago that the exchange has seen approximately $1.14 billion in net withdrawals, and that's significantly less than what we've seen earlier this morning, according to data reported by Nansen. So there's been a huge amount of withdrawals, particularly in stablecoins from Binance over the last 24 hours. And as you mentioned, the amount of customer funds coming out of Binance was large enough to temporarily halt redemptions for one stablecoin, which is called USDC. Now, importantly, over the summer, USDC was sort of phased out by Binance for its proprietary stablecoin. So that could be what this temporary halt looks like in USDC. But we can't overlook the fact that there's been a huge amount of cryptocurrencies withdrawn from Binance in recent days. Two major market makers, Wintermute and Jump Crypto, have both redeemed up to about $435 million in total in the last week, and that's as of yesterday afternoon. Binance has also seen a huge, about a $547 million move from its treasury wallet in the stablecoin Tether. And that could potentially be to shore up liquidity, given that these market makers are leaving. Still not a good sign. And Binance spokesperson would not offer further comments around this scenario. But we all know that at this point, withdrawals are not good for cryptocurrency, even if they are temporary, especially in light of what FTX did in November, which is looked to us since the bankruptcy filing as a misappropriation of customer assets. So that's obviously put Binance under fire right now. The bigger story of the day is the indictments that are rolling out around FTX's Sam Bankman-Fried. But we'll continue to watch this story as it unfolds. And regardless, I think it is worth pointing out that Binance has attempted to push its transparency further in recent days, and those reports have still fallen short of SEC filings, and that's left a lot of investors asking for more and, largely concerned.
Yeah, David, some context on that $1.9 billion number. Nansen at least saying that this is the largest withdrawal they have seen from Binance since June of this year. So something to note here as we continue to follow that situation there. David Hollerith, as always, thanks so much for that. Well, former FTX founder Sam Bankman-Fried now facing charges for defrauding investors. House Financial Services Committee Chair Maxine Waters weighing in on his arrest earlier today. Take a listen.
Unfortunately, the timing of his arrest denies the public the opportunity to get the answers they deserve. Rest assured that this committee will not stop until we uncover the full truth behind the collapse of FTX.
Here to weigh in is the Southern District of New York's former assistant state attorney and former Watergate special prosecutor, Nick Ackerman. Nick, good to talk to you. Let's lay out the charges right here. The federal indictment that was unsealed this morning pointing to 8 counts tied to wire and securities fraud, also a conspiracy to defraud the U.S., violate campaign finance laws, and yet in that House hearing, we heard John Ray talk about how little documentation there was available within the company. So how much harder is a case like this to prosecute when you don't have that paper trail?
Oh, I'm sure the government has some of that. But basically, the indictment comes down to not sloppy accounting or not maintaining records properly. What it comes down to is lying and stealing, basically. What the indictment charges is that Sam Bankman-Fried lied to the investors at FTX, he lied to the customers at FTX, and he lied to the lenders of Alameda, which was his private company, where he basically moved monies around between FTX and Alameda. That's what this comes down to. And certainly I believe the government has the paperwork. It's just that if you had Sam Bankman-Fried even testified before a committee today. All he was going to say was this was sloppy accounting, when in fact this indictment makes it very clear that this was a concerted plan going back some 2 to 3 years, where essentially monies were moved around without any disclosures to any of the customers, to the investors, or to the lenders of even his own private company. So this is a fairly serious charge. I think what we're seeing now is the bare bones of this indictment. It seems pretty clear that there are other people that were involved. He's charged with conspiracy. The indictment charges people known and unknown. I think we're going to see a superseding indictment at some point. But certainly this indictment is sufficient to arrest him and have him indicted and sent from the Bahamas back to the Southern District of New York, where he will stand trial. So bottom line, this, whatever documentation is out there, the government they have the statements, the false statements that he made to the investors, the customers, et cetera. And on top of it all, they've also charged him with campaign violations for essentially donating to campaigns without disclosing the true source of those campaign donations.
And Nick, as with anything that comes to FTX, a lot of rumors were swirling online about why he was arrested before he had a chance to have his public appearance here in front of the committee today. Does it help or hurt SBF in any way by being arrested and not appearing today?
I don't think it really made a difference, because it was pretty obvious to me that if he showed up at the committee and testified today, he would have basically tried to argue that this was just sloppy accounting. He certainly wouldn't have admitted that he lied to customers, that he lied to investors, that he basically moved money around from FTX, a public company, into his private company, and not disclosing any of that to the lenders of his private company. He was not going to admit to that. So I think the arrest saved the company from listening to a lot of bogus testimony today.
Nick, we've got the statement given to Bloomberg from Sam Bankman-Fried's attorney saying essentially that he is reviewing the charges with his legal team, considering all of his legal options. What do those options look like at this point? And can he even fight extradition?
Oh, I don't think the extradition is going to be fought. I think he's going to be extradited. The charges here are serious enough. In terms of his options, he's got really one of two options. Either he pleads guilty, makes a deal with the government, or he goes to trial, which, based on what we know at this point, is just going to be a slow guilty plea. I just don't think, based on this indictment, the way it's laid out, over the time period that's laid out, and the myriad of charges and the people who were defrauded, that he's got much of a chance of being acquitted on these charges.
And I just quickly want to ask you about jurisdiction, because this is considered an entity that's based in the Bahamas. How does that complicate the situation?
Not really too much. I think if you look at the indictment and also what the SEC issued this morning, a huge amount of the money that went into FTX came from U.S. investors. So it really involves U.S. investors and false statements and fraud that was committed within the territorial United States. So I don't see that being an issue at all, based on what I've read from the SEC charges and from the indictment.
We do thank you for breaking all of that down for us. Former SDNY Assistant Attorney and Watergate Special Prosecutor Nick Ackerman, thank you so much for joining us this morning. All right, coming up, to the moon. Well, low Earth orbit at least. SpaceX reportedly selling insider shares at $77 a pop. Will it ever go public? And if so, when? We'll discuss next.
Well, insider shares of Elon Musk's SpaceX may be available for $77 a share, valuing the company at $140 billion. That's at least according to Bloomberg. Let's bring in Yahoo Finance's Praz Subramanian, who's tracking the story for us. Praz, why now? I mean, think back to what the valuation was in July. It was just over $120 billion?
127 billion, yeah. And then I guess, hey, look, if times are good, SpaceX is doing really well here with their businesses, why not try to cash out if you're an insider? Why not try to do a tender offer here if you're someone who's locked up with some shares? I guess, like you said, mentioned the company valued at $140 billion with this tender offer. Looking at the SpaceX business, they've been doing quite well, right? They're sending payloads up for clients, both private and also public companies, government companies like NASA. You've seen they're launching their own Starlink satellites up. They're taking astronauts to the ISS, doing some private space tourism. But then also they're going to be part of the Artemis moon mission with creating a type of Starship lander for that. So a lot going on for the company. You can't be surprised that they want to kind of cash out a bit here. Looking at Elon Musk, for instance, his stake's worth around $47 billion. So maybe for him, it's a way to unlock a little bit of money too for the things that he's been doing without having to sell or pledge Tesla shares.
That was my first thought. I was thinking, perhaps this might be a way to get a little money there to go for Twitter. A big thank you there, Praz Subramanian, for joining us. All right, well, Airbnb listings for the third quarter jumped 17% year over year, and as demand for short-term renting is growing. More on that next. Airbnb listings for the third quarter jumped 17% year over year, and as demand for short-term renting continues to grow. Joining us now for a breakdown on that is Yahoo Finance's Ines Ferre. Hey, Ines.
Hey, Rochelle. And there's been a lot of talk about what a recession will do to the short-term rental market. We recently saw online some backlash against the short-term rental market, complaints. Also, some hosts wondering why their occupancies have fallen recently. Well, Airbnb had done some algorithm changes, but if you look at the data, this may have to do with supply. 54% of the global online listings on Airbnb were added since 2020. That's according to AirDNA. That's a data analytics firm. So this coincides with the era of low mortgage rates last year, folks scooping up properties, listing them as short-term rentals. And I spoke to one property management company. They said that this is now a normalization of the short-term rental market. In some saturated areas, some short-term rental hosts may have to pivot to mid-term rentals. That's what they're seeing now. As far as supply is concerned, this may continue because remember, a platform like Airbnb started during the recession when people were looking for more extra income during the last recession, 2008. So Brian Chesky, CEO of Airbnb, recently was on Yahoo Finance and said, look, there may be more supply coming because during a recession, folks will want to make more income. So you may even see more supply of listings going forward.
We'll be keeping an eye on that. A big thank you there. Yahoo Finance's Ines Ferrer. All right, well, let's do a final check of the major indices. We see stocks higher, but giving up some of the earlier gains, all that after softer than expected inflation reading. We're also seeing in terms of sector action, energy, the big leader of the day, up almost 2%. And surprisingly, even despite all the FTX news, we're also seeing that crypto, we're seeing Bitcoin and Ethereum also up for the day. Well, that will do it for now.
Yeah, we should point out, Rochelle, there that we're looking at the FOMC meeting are obviously underway. Today, we're going to be looking for that decision tomorrow. As we were pointing out with the CPI reading there, index up 0.1% in November. That was cooler than expected. Certainly expectation, at least initially when we got that print, was that, well, maybe this means that, you know, we'll get a little more of a dovish Fed. I'm not sure that expectation is really well met because Jay Powell's made it pretty clear. One data set will not change the direction of where the FOMC wants to head. But of course, that's certainly going to be in focus. A very busy news day for us today, but we will end it right there as we look at all three major indices in the green, extending their gains from the pop that we saw yesterday. And of course, investors are going to be really focused on the Fed come tomorrow. That does it for Rochelle and I in the 11 a.m. Eastern hour. We've got much more to come here on Yahoo Finance Live. Keep it right here.